Hello and welcome back to Memes and Markets. Keith, how are you, man?
Today's the best day of my life, Ben. How you doing?
Today's the best day of my life because we have some amazing guests that I'll throw it back to you to introduce, and I will say what up to everyone in the chat.
What up, chat? We have Jen and Kristen with us here from the Wall Street Skinny.
Hi,
How are
guys.
y'all doing?
Hi, chat.
Hello.
Thanks for having us.
So high tech. We have done a couple of lives before, but I mean, you've got the intro music. I was sitting here jamming out. Thank God I turned off my microphone.
A banger for sure.
You would have heard me a cappella. This is amazing.
Love it. Coming with the energy this morning. We appreciate it. What's up, chat? So, yeah, let's dive into it a little bit. I wanted to give you both a second to just kind of introduce yourselves a little bit. We know you got a hard stop, so we want to be super
we were like, we need
90
food.
minutes from now.
Yeah.
But yeah, please just tell us a little bit about yourselves, kind of like you have some experience on Wall Street specifically, and like kind of how you have built out what you're working on now.
Yeah, so we're Jen and Kristen. We are the Wall Street Skinny. We have been best friends since the second grade, and we stumbled into the financial services industry after having prepared our lives to do anything but. I'll let Kristen tell her story, but I graduated from Princeton with a degree in English literature and ended up going straight to work on Wall Street as one does, specializing in interest rate derivatives. So I worked at Lehman Brothers, rest in peace, then Barclays Capital. You youngins may not have heard of the old-timey institutions that used to be around long before the great global financial crisis. Worked at Barclays and then Morgan Stanley. But we run a show, social media platform, self-paced curricula, and we do speaking engagements all over the world talking about everything from, the deep dives and 101s of how Wall Street and high finance actually works to talking about the biggest deals, market moving events and everything. And we try to keep everything really, may I swear on here?
Go for it.
Really fucking simple. Because if you pick up the Financial Times or you read CNBC or you pick up Barron's and you're trying to understand what's going on, I don't know about you, but even after 25 years of reading about this stuff, sometimes my eyes glaze over. So we try to keep everything super simple. And, the way we think about it is if you can't explain it to a 5-year-old, you probably don't know how it works anyways. So that's me. Kristen, I'll let you introduce yourself.
Awesome. Hey guys. So I, like Jen, did not study anything finance in school. I went to Brown. I graduated with a mechanical engineering and biomedical engineering degree. Decided that I didn't want to do anything medicine related. I was doing a research internship next to a cadaver lab, and it freaked me out. So I went and visited Jen for my 21st birthday in New York City. And I was like, I want to do what she's doing. She had an internship at Morgan Stanley. So I joined Morgan Stanley, and similar to Jen, who was at Lehman Brothers, which took down the global economy, I happened to start my career in the CDO desk, which was the product responsible for taking down the global economy. Although I will say, in my defense, I was working in CLOs, which was not a product that was toxic. It actually outperformed like crazy, which is a total aside. But anyway, so to Jen's point, we worked on Wall Street for a while, and then I've always loved teaching. And so I ended up leaving, and I worked at a company that traveled around the world and did the new hire investment banking training programs. So I would teach at Blackstone and Goldman Sachs. And so would basically do this intensive 10-day thing where we would train people how to build a financial model and how to value a company and structure a deal. That got a little bit boring after a while. And so Jen and I, as I said, we've been friends since we were 7. I told you, Keith, how old we are. I don't know that I want to repeat it, but again,
you guys can do the math. Everyone,
you can do the math if we were working.
Arithmetic.
Yeah. And so we started the Wall Street Skinny 3 years ago. And part of it was, to Jen's point, I really knew the investment banking side of stuff well. I knew the deal structuring. We put up a series of a carousel on Instagram the other day about how, the Paramount's acquisition of Warner Brothers is really a leverage buyout in disguise. Like it's the Ellisons doing an LBO of Warner Brothers, which is insane because like Paramount's this teeny tiny company, whereas like Warner Brothers is huge, and you're like, how the hell is this working? And it's literally an LBO. But there's all this stuff that, again, like I feel like if you're not someone who's been in the financial press, like, or if you haven't worked in Wall Street or whatever, you don't necessarily understand this stuff. So I really understood that well. Jen understood the markets well, and we were like, let's try to do something and talk about what each other does. And I want to learn what the heck like is going on in the markets and duration side of the world. So we started the podcast, we started our Instagram, and kind of things went on from there.
That's so awesome. That's awesome. Yeah. So you guys seemed like you were very close to the financial crisis when it happened. I've only seen a bunch of movies. How accurate were those movies to like what was actually going on?
Well, I mean, I'll be very honest. I'm just now getting to the point. We are 17 years hence where I can actually start to watch them because I was like, I don't need to watch, Steve Carell. Well, it wasn't like he was playing me, but I don't need to watch the fictional representation of this. I freaking lived it. So I will say this. I mean, I think what Hollywood does well that we try to do is when there's a story and when you care about people versus being like, did you know that CDO squareds were actually based on faulty collateral? Like boring, no one wants to watch that movie. So storytelling is something that we've embraced as a way to get big concepts into your brain. We have an entire podcast where we just recap HBO's industry because it's like, I can't really get you to care about forward starting interest rate swaps, but if you see somebody in an episode yelling at their trader for that price, you're going to care about it. So I think that they did a good job overall getting people, there's that like famous scene with Ryan Gosling where he's breaking down. It's like, it's a Jenga board, blah, blah, blah. Anyways, so long story short, I've like seen enough clips to kind of be dangerous, but having lived it, I will say this. I think that people really don't understand the degree to which it felt like we were standing on a cliff looking into the abyss. And I mean, my story, I've shared before on the podcast and we can get into it if you want, but I was fortunate enough to have had 2 great years, to not have any student loans and be like, you know what, maybe I'm going to go like be a chef in Italy or like discover myself. But my poor husband had just graduated from Wharton with $150,000 worth of debt. And he started on September 15th at Lehman Brothers and showed up to a firm that didn't exist on his first day. Wow. So I mean, being 29 years old and thinking about moving back in with your mom in Baltimore, Maryland, like that, I think is truly staring into the abyss relative to what I had to go through.
Yeah. And I mean, look, I was across the street from Jen because like if you ever go to New York City, you had Lehman Brothers and Morgan Stanley, like they're right there in Times Square. And I mean, we were very junior. We were an analyst. We were cheap. I mean, like people weren't firing us, but you also had people who were at Lehman, for example, and I think the narrative is like nobody paid. And honestly, like the people who they had their whole net worth tied up in Lehman Brothers stock and like everything went to zero. So, I mean, the employees at a lot of these banks, they actually like did pay. And I will say it's one other thing where, we can talk with this a little bit because I know we want to talk private credit. I also think that part of the narrative is like, there's a little bit of almost the personal responsibility that people want to gloss over when it comes to some of these loans and the mortgages that were taken on by the public. And, it's funny, we're going to do a video or we're going to put some content out about gating. And my husband and I got stuck in a fund that got gated. And so basically that's a big thing these days where it's like you have this push for people investing in like private credit, and private credit funds like Blue Owl have started to limit redemption. So it's like you invest money in this fund and they say you can get 5% of the fund back in some time period. But if too many people do that, they can say nobody's getting their money out. And that's called a gate. Gating sucks. By the way, it's also a feature. It's not necessarily a bug because if you have, these are long dated like investments that this fund has made. And if you have tons of people trying to pull their money out, they have to sell at fire sale prices and everyone in the fund basically gets screwed. So there's that little bit of, I do think that sometimes people like to gloss over that. I keep saying like personal responsibility, but I mean, as someone who was in a fund that got gated, my husband and I also, we were living in New York City. We needed to move to Massachusetts. We had put money into, it was actually Blackstone's REIT. It was called B REIT. They gated and it was the most pain in the ass thing to get out of. It was like, we had to like write freaking like wet signatures and put in these redemptions. It was like, they made it so hard to get out of. And it was like obnoxious AF, but also like, I don't know, we like probably should have read the fine print. So anyway, back to the whole point on the financial crisis, like it was scary as fuck when you were in it. But I do think that the narrative around it is like these terrible bankers, like who nobody got hurt. I mean, again, a lot of the bankers did suffer. And ultimately, I do think that we're missing kind of the bigger structural thing about how we got into that mess in the first place. Because anyway, that's a whole other story for another day.
I don't even want to know where you guys were during the global financial crisis.
No, you don't. You don't, Jen. You don't.
You guys were in second grade. Born? Who knows?
That's pretty accurate.
I was like 3rd or 4th grade, I think.
Yeah. Yep. So it was interesting though, because at that point you are old enough to see that it is impacting people. People are stressed out, right? Your parents, depending upon obviously, what you're dealing with or what you're around. But yeah, I mean, I had a parent in the banking sector at the time. So you start to see like the consolidations happening, like the name of the company that they're working for is different now and things of that nature.
Yeah.
But so
well, and
anyways,
I will add one more thing. The group that I was in went from 40 people when I started to 3, because they basically had to there was just like rounds and rounds of layoffs. So it's just like tons of people losing their jobs. And obviously that did trickle through to the rest of the economy, because it's one of these things where I do think that the bellwether for what's to come often is what's happening in banks. Like banks they start to fire people first, and then and then the rest of the economy starts to shake. Not because it's because of that. It's just that it's one of these things where it's like the bellwether. It's like, that's the sign that shit's starting to go bad.
Love it. Well, thank you both for breaking that down. I think also that gives us a perfect setup for the conversation that we're having today, where there's a little bit of a potential crisis going on in what's called private credit.
Yeah.
Now, I want to make sure, we want to come into this as if no one has any idea about private markets, about fundraising, any of that kind of a thing. Can you give us a breakdown of what even is private credit, and why would anyone put money in it, and why are they trying to take it out?
Yeah,
Yep.
so I think the simplest way to understand private credit is it's simply defined as anything that doesn't trade in the public markets. So when you go on Bloomberg and you look up a bond, most bonds have what's called a CUSIP. It is a unique identifying number, like you see a serial number on a dollar bill or something like that. Those are publicly traded bonds, right? But if you decide to, let's say, borrow money from, let's say Kristen and I decide to do a loan together, right? Kristen's a big investment bank, Kristen Kelly Inc. And I say, hey, Kristen, I want to go to you. I want to borrow a bunch of money. I want to borrow $1 billion. There's 2 ways we can do it, right? She can say, okay, that's cool. I'll underwrite that loan, but I'm going to syndicate it out to a bunch of other people who are going to help me take on this risk. And then we're going to securitize that risk, and we're going to sell it off to investors in tiny little parcels called bonds. And each investor can come along and buy a piece of that bond, and they get identical cash flows, and they also get identical risk. And that way, it's great because I, Kristen, now no longer need to hold all this risk on my balance sheet. All of my cash isn't tied up in having just one loan to Jen. Isn't that great? I can go make lots of other loans because I've securitized that and sold it off. Or we can do something called direct lending, where I go to Kristen and I say, hey, I need $1 billion. And she goes, great, awesome, done. But if you're going to borrow it just directly from me, I get to write all the terms. I get to decide what this looks like. And I get to probably charge you a little bit more interest because I am tying up all my money with you and I'm wearing that risk. And so that's the direct lending model of private credit, where effectively what formerly were private equity firms have expanded their operations, or you have just dedicated private credit firms where they are making those direct loans, and it's them and maybe 1 or 2 other counterparties. And the benefit for most businesses who are borrowing money in that system is that if they go to negotiate, first of all, they can close these loans very quickly. If you're going to the traditional banking system, it can take weeks or months going to the capital markets, building a book, finding all these investors, finding the Fidelities and the Vanguards and blah, 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 to all buy up pieces of these bonds and make sure that every single last dollar of that deal gets underwritten and spoken for from the investor standpoint. By comparison, private credit can close these loans very, very quickly. We spoke to a senior operator at 6th Street, which is one of the oldest and largest private credit firms. They also do private equity. And they talked about basically turning around a loan for Airbnb during the peak of COVID, which we've just come up on the anniversary of it, in 11 days. That just doesn't happen with banks, with traditionally syndicated loans and bonds. So that's one benefit. The other benefit is that, let's say something goes wrong for me, the borrower. I can go back to just Kristen and say, hey, I know you said that I really have to maintain this kind of leverage ratio or maintain these covenants to make sure that nothing goes wrong and I haven't been in violation of these docs, but something has gone wrong. can I renegotiate directly with you? That's a heck of a lot easier than going and finding each of those individual investors at the Vanguard, the Fidelity, the little old, grandma in Idaho who's got her 401k tied up in these bonds to renegotiate all of those terms. So that's the basics of private credit when it comes to direct lending. There is a whole world of private credit beyond just that direct lending model. But I think that's the easiest way to understand it. It's that there's no visibility because these things don't trade in the public markets. And there's this liquidity premium that investors get for tying their money directly up with this one counterparty and not syndicating out that risk more broadly to investors.
Yeah, and I think I would add, so, if you're thinking about the different types of private credit, as people put it, it's worth understanding a couple of the nuances because one of the reasons why people are really nervous about private credit has to do with SaaSpocalypse. So if you think about just the world of private credit, right? Again, you as an investor, you're putting your money into some fund that's maybe managed by Blue Owl. Blue Owl then takes that money and they make loans to different players. So it could be they're loaning money to a private equity firm, right? It could be like a Blackstone. Blackstone wants to go buy, they've identified some target. Let's call it Target, whatever. I think that at one point people were talking about Target as being one of the largest LBOs, which I actually think would probably be smaller than Warner Brothers, but regardless. So they identify some company, they want to buy it. It costs $100 and they're only going to put in a tiny amount, like call it 200. How much? I said $1,000. They're putting in 200. They're borrowing 80 from somebody else. Who are they borrowing it from? It's that private credit firm. But the point is that's what's called acquisition debt because they're lending in some deal. You also have project debt. And so that's what we've started to see with a lot of these data centers where you have Meta or you had CoreWeave. Actually, apparently the CoreWeave, I think it was Oracle data center that was going to be built is now being pushed over to Meta. But for example, if you want to build this project, this data center, you need again, debt to finance it. And so you could borrow it, like I said, from that fund. And then there's the direct lending that Jen was talking about. But what's important to understand is that, especially with the private equity piece, a lot of the acquisitions that they did where they needed that project debt was for companies that were in the SaaS sector. And so that's where people are starting to get nervous about, oh my God, are these, we've lent money to these companies. Are they going to be able to lend or pay us the money back? Because here's the thing, right? You think about just like corporate finance 101. You got debt and you've got equity. Equity, you put your money in, that's risky, right? You're getting paid the highest reward because the money can go, like, it can go to the moon, it can go to zero. You can get wiped out completely. Debt, on the other hand, is different. It's literally a contract. Like you are giving someone money. In exchange, you're getting interest, and then you're supposed to get paid cash back. And what's interesting too is that typically, even if those companies go bankrupt, you should be getting some recovery. Like there's a bankruptcy and at some point they work it out and you can like take over the business. You can take over the physical assets. If it's like the data center, you now own a whole bunch of that stuff. You can recover money. So debt is much less risky than equity. So you get paid less for it. However, in this private credit world, because you're supposed to be tying your money up longer, right? You can't just like go sell it in the public markets the way you can with a bond. You buy it today, you can sell it tomorrow. You're tying your money up longer. And in return for that, you get paid more. And so that's this idea with private credit is that individual investors, whether it's these institutions or, now it's getting this push into retail, they invest in these things because they're supposed to get paid more for what's called that illiquidity premium. And so that's this whole thing right now where it's like you have a lot of investors who are getting spooked about the idea like, oh my God, these SaaS companies won't be able to pay their money back. I actually don't know that that's the case, but there's a lot of panic. And so people want to pull their money out. And now all of a sudden, that's why they're like, we got a gate. Because again, if you start just like selling shit, you have Boaz Weinstein coming in offering 65 cents on the dollar. Cool. Do you really want to sell at 60 cents on the dollar when like it's really worth more, but people are just panicked? I mean, again, probably not. So again, the gating thing that we've talked a little bit about, that's why I keep saying it's a feature, not a bug. I mean, it is a bug and it sucks if you're an individual. And also I think that like there needs to be a lot more restrictions on who you can take money from and the disclosure about the potential for gating, because I think a lot of people just like don't realize that this is possible. But again, there's a reason that it's there. You're getting paid a higher return because of the illiquidity. So I'm going to shut up for a second and just see if like you guys have anything you want to say about that or questions that we can help with.
No, great breakdown there. I appreciate it. Who are some of the biggest players in the private credit space? What are the names that people should know about? And yeah, can you kind of tell us a little bit more about that? Someone also asked the question of, do the private equity and private credit people, like, is that like one big group of people? Do they work with each other often? How does that look?
You
Oh, that's
got
a
it. So when it comes to the biggest names in private credit, you're going to have a lot of overlap with the biggest names that you've always heard of in private equity. So you just heard Kristen mention Blue Owl, Blackstone, a lot of these
BlackRock.
names, BlackRock, yeah, exactly. A lot of the big names in private credit. You also mentioned Boaz Weinstein. We just saw Dan Loeb from Third Point the other week. There's so many different private credit entities that are all very similar with the Apollos, the Carlyles, the big traditional private capital markets players who traditionally dominated in private equity figured, hey, wait a minute, listen, hang on. People want to give me a lot of money. I can do a lot of stuff with this money. If I need to go make this private equity acquisition over here with my right hand, guess who can lend to it? The left. So a lot of it has been happening in-house and they keep all the returns. But what I want to add on to that though, the most surprising thing has been that in addition to all of the traditional private capital market players, the traditional buy side institutions, if you will, you also have the banks. So one of the biggest players in private credit is JP Morgan, which I think is so ironic because it's the traditional lending institutions that effectively got regulated out of existence or out of relevance as a reaction to the global financial crisis, then in fact have been the ones chasing the last marginal dollar in private credit. And so I think that's been one of the most interesting developments as well.
Yeah, and sorry, I wanted to jump in just to make the point that if you think about, by the way, how these private equity firms or the Blackstones, these asset managers really is what they should be called, how they're making money, they make money on assets under management. So, traditionally you tend to think of like 2 and 20. So, they raise $100, they're going to make 2% of that or, $100 million, whatever, 2 million a year. And then they get 20% of the upside. Now, for private credit, it's a little bit less. But regardless, if they're able, like you have a private equity firm who's able to take money to work, charge those fees to buy the company, raise more money from other people, because by the way, this is not their own balance sheet. This is money that they're going out and raising from other people, right? Raising from Harvard's endowment, raising from CalPERS, Ontario teachers, what have you. So they're raising these different funds, and then they're buying the company with equity from one fund. They're lending with the private credit from another fund, and they're making fees on both sides. So again, they tend to attract at the end of the day, it's a business, but like they tend to attract like the best and the brightest, arguably, who want to go work at oh my gosh, I want to work at Blackstone, I want to work at Apollo. And so either you're getting very talented people, but also the fact that like they're off on both sides means they get to make more money. Now you also do have players that are just in one space. You also have, there's these things called like business development companies, which is something that we can get into as well. But the point is that you can have these like just only private credit players, but then you also have these behemoths, to Jen's point, Blackstone, KKR, whoever, who are all doing this as well.
Does that kind of sitting in the middle of both the credit and the equity side of that equation, does that create moral hazards or things that like could be problematic in that, or is that just the way that it goes?
Yep, it absolutely does. Because think about it, right? When you own both sides of the company, you are incentivized to, at the end of the day, make as much money as possible, right? You're not going to, if let's say you are the private credit fund arm of insert giant mega fund here, and the private equity arm of said mega fund over here, you own both sides of the debt and equity of a given private company. If all of a sudden things start to go bad, right? You would think, do not want that company to fall into distress because things are going wrong in terms of like the revenues that they're creating, et cetera, et cetera. So you might be more willing to say, renegotiate terms, et cetera, that might put your investors who are invested in those bonds at risk. Vice versa, if you are the debt holders, you are not likely to impose the same kind of penalties on the same company whose equity holders don't want to be put at risk, who would be the first on the chopping block effectively if the company were to go under. So I do think it does create a moral hazard, philosophically speaking.
I'm actually not so sure, to be honest, because it's funny. We are about to talk to Sajid Indap, who wrote the book Caesar's Palace Coup. And it's a really fascinating book if anyone's interested. But I will say, like, it's a story about the acquisition of Caesars, so like Planet Hollywood, by Apollo and TPG. And they bought this right before the financial crisis. The company headed towards bankruptcy, and the elbowing and like the shenanigans and the screwing over of the other capital holders that you saw by Apollo because they were in the equity piece and not the debt. I will say it might make them play a little bit more fair if they're,
That's what I'm saying. I don't think they ever would have played as
yeah, but again, they were
as viciously defending their interests had they owned the debt.
Yeah, but I also feel like what they did was like should not have been legal. It's by the way is a wild book. Like it's there are concepts in distressed debt. By the way, distressed debt investing is like the coolest thing, but it's like J screwed. Like there's stuff that people do that I mean, honestly, like I would never do to my worst enemy. It's like so horrible, and I think should not be legal. But I mean, so I guess it's like okay, you're not going to try to rip someone's face off. But like maybe you shouldn't be trying to rip someone's face off and play by the rules as they are written. So at the end of the day, it's like if something goes into a bankruptcy, I mean, and this is sort of like worst case scenario. In general, if you are buying a company operates, the goal is to ultimately grow the business, sell, and everybody wins. Like that's what people want. So I actually don't necessarily think it's a terrible thing if you're like, hey, I am operating the business. I am potentially getting into trouble, but I can renegotiate. And again, maybe to Jen's point, the lenders give more favorable terms than they should have because it's owned. So that is possible. But also you could make the argument that actually they're more incentivized to actually have a more favorable outcome and help the business succeed. So it's not always the worst thing. Think about running a business. If you get a loan from your dad or your parent or a friend, they're like, I really want to believe in you. So again, I'm willing to work with you and like, let's get out of this versus some random person who's like, I'm just going to like take my pound of flesh and screw you over. So I don't necessarily think it's always the worst thing. But to Jen's point, again, in a case of bankruptcy, I mean, it might mean that your lawyers aren't fighting nasty, which again, I don't know is necessarily terrible. But by the way, just plug for that book, Caesar Palace Coup. It's like super, super fascinating. Or you can read our or listen to our podcast, watch our YouTube on it if that's easier.
Very cool.
But that's a great question.
I appreciate it. I appreciate both of the perspectives of looking at that for sure. One of the things that you have brought up so far is that this private credit thing has not really been around forever. It hasn't been big forever. And I wanted to kind of look at some of the data of the growth of private credit and how that has continued to evolve. And now there's projections that by the end of 2028, this will reach to be a $3 trillion market. Now, the other thing that I wanted to point out about this is because 2008, right, and the regulations that came in around there was what kind of led to this boom in private credit. And after that time as well, we also saw a continuation of consolidation of banks, or rather the amount of commercial banks that exist and continue to decline. So all of the money, right, that these banks were lending out to people has now gone from, well, banks aren't really allowed to make these kinds of loans anymore. And now it's all kind of going into this private credit market and all of these new managers and funds that have popped up to kind of absorb the fact that banks can't lend in that same way. Can you speak a little bit to what really happened there on the regulation side? I believe it's called the Dodd-Frank Act, and how that led to what we have here so far.
I, by the way, love that you like came with slides. So way to go. We are like the least prepared presenters ever. I love a slideshow. It wasn't so much Dodd-Frank as it was really Basel. So if you think about making loans, I've seen a lot. I've been trying to keep an eye on the chat. There's a lot going on in there, but I saw a lot of comments about like the fractional banking system and things like that. At the end of the day, right, for every dollar that a bank lends out, there isn't necessarily like $1 in deposits backing that, right? It's not Mary Poppins where we want to set ourselves up for a run on the bank if, little Johnny, whatever his name is, can't get his $2 back. So I think it's really important to remember that one of the lessons of the global financial crisis was banks need to have massive cushions of capital in order for the general public to feel comfortable about them taking on risk, whatever that may look like. And so effectively, a series of regulations were put in place that then kind of hit a fever pitch and have since been walked back. But these were called the Basel requirements. And so there was Basel 1, 2, 3, Endgame, all this stuff, basically imposing increased limitations on banks, even asset caps on some of them in response to wrongdoing. There's an asset cap on TD now. There was one on Wells, et cetera, where basically it meant that they needed to hold all of this tier 1 capital. So equity, cash, treasury, all these things on their balance sheet in order to then use their money and put that to work, whether it be in the trading side of things or whether it be in the lending side of things too. So bank balance sheet came at such a premium that it made it very difficult for banks to go out and engage in any kind of risk-taking behavior. Because by the way, lending is taking risk, right? Lending is not just like, oh, well, I said you're guaranteed to pay me back. That means you will, right? There is a risk-taking element to lending. So between the capital requirements and the asset caps that were put in place on some banks, that caused major constriction in the traditional lending space and drove so many borrowers to private credit. This was all also combined with the fact that we had effectively a zero interest rate policy for the better part of a decade that kept rates so low that investors were running out seeking any kind of marginal yield they could. And so banks, they don't have a lot of wiggle room in terms of how much they can charge relative to these private capital market lenders who say, okay, yeah, sure, you can deal directly with me. If you ever, like, I see a lot of people in real estate here, right? You guys know direct lenders in the real estate market, when rates were at 4%, 5%, these guys were charging 10 plus. And it was absolute usury, but it was for borrowers who couldn't otherwise get loans in the traditional markets. Yeah.
Can you briefly also touch on that Basel thing? Because we hear about Basel III, Basel Endgame, but where does that actually come from? Who is setting or coming up with these requirements for the banks?
Oh, the governments, the regulators, the SEC, all that fun stuff. And to be honest, I'm not a regulatory specialist, but all of these regulations, generally speaking, are written by people. By the way, Barney Frank was on the board of SVB. So like those who can't do teach, those who aren't practitioners are lawmakers. So like a lot of these rules and regulations were written by, Volcker rule was written by ex-Fed chairman Paul Volcker. Like there's a lot of politicians and regulators involved in making rules about things that they don't necessarily ever understand. Having been on the other side of the phone when these guys call to ask how interest rate derivatives work, to try to understand what tier one capital needs to be held against them and how these things needed to be regulated and put on exchanges and all these things, I can assure you that these were very well-intentioned rules that unfortunately have had the side effect of taking all of these loans out of the very heavily regulated space and pushing them into a space that isn't. So we can all decide if that's better or worse for the consumer.
Yeah. And to Jen's point, I mean, like one of the things was because at the end of the day, banks also tend to be depository institutions, meaning you and me, like we give money to banks to hold it. And like that money has to be there if people want to take the money out. So the banks are so much more regulated than these, like an Apollo. Apollo is not taking people's money. So they can do a lot more. And Jen always likes to joke, it's the Jurassic Park. It's like life finds a way. So you can't necessarily get these, loans from these banks that are super heavily regulated. What happens? Okay, you get the Apollos, the TPGs, you get all of these other players who are coming in to fill that space that was historically held by the banks. The banks got regulated and up the wazoo. And so now you end up with like these other players that are less heavily regulated. Now, with that said, I mean, we talked to the guy who wrote like the Credit Investors Handbook, Michael Gatto. He was like, the good news is that means that this is not systemically important. Like you're not going to see a 2008 financial crisis from this. Like, sure, people are going to lose their money, but also, I mean, most of those people are going to be institutions. Like it has been more recent that you had retail investors who were able to access the private credit markets, and they've done this. The banks. I heard like the Robinhood CEO on Odd Lots talking about this, where it's like they're starting to create these structures that are semi-liquid. So that's that whole thing with like the gating. There's something called these business development companies where it's kind of similar. But at the end of the day, people will potentially lose their money, but it's not going to take down the world economy necessarily. So it's like, but also like there's just much less regulation for better or for worse.
So why would it not have the same kind of impact of taking down everyone else?
So think about it this way. Right now, at least as it stands, the average person doesn't have private credit in their portfolio. If you go look at your Fidelity account or your Vanguard account or wherever you have your money managed, maybe you have a pension fund. That pension fund may be invested in private credit, but your day-to-day investment portfolio isn't tied up there. Your cash, your checking account isn't tied up in private credit. Now, we can talk about to what extent the banks have gotten over their skis chasing this money. We can talk about the fact that, okay, well, if your pension fund is invested in these things, what if your pension fund suddenly becomes underfunded? Okay, now we have some problems, right? But at the end of the day, the biggest difference is that this isn't systemic in the same way that the mortgage market was in terms of the private consumer's balance sheet. These are institutional investors' balance sheets. So just as a rising tide floats all boats, If there's going to be a collapse in private credit, it's not that it won't impact the daily consumer. It's just that your personal balance sheet is much more insulated from the direct impact of that. The fallout would be credit spreads wider across the board. It would be, which means your mortgage rates go up, which means it's harder for companies to borrow money, which means likely everyone's margins go down. So your S&P, your bonds, whatever you do have in your portfolio probably doesn't fare that well. But there's much more resilience now built into the system because private credit doesn't touch everything to the same extent that everything that was systemic to the institutions in 2008 did.
Got it.
I also will add, I mean, I am still skeptical that this is going to be as bad as people think it is. I mean, the issue in 2008 was the amount of leverage in the system. And so just to give you an example, right, with CDOs, the traditional toxic shit, you start with, first of all, the banks, and these were usually the commercial banks who were making loans to people that probably like were not able to afford whatever the houses that they were buying. There was assumption that housing prices just go up. And so if something went wrong, they were in trouble. But so there were all these loans made that should not have been made in the first place. You then have people like banks take those mortgages and they package them up into something called mortgage-backed securities. Those mortgage-backed securities then go into another layer called the CDO. And then you sometimes have the CDO squared. Like this is leverage upon leverage upon leverage, securitization upon securitization upon securitization. What we are seeing right now is not that. These are loans that are being made to usually companies, and that's it. It's like a pool. Now, there could be some leverage. I think some of the business development companies can lever up like 2 to 1, but it's not leverage upon leverage upon leverage in the same way. And back to the point I made before, loans are usually like assuming the underwriter, assuming, your Apollo, your Blue Owl did their due diligence. Like we talked with Michael Gatto about. He's like, when the markets are frothy, there's good deals that are going to get done. There are bad deals that didn't get done. There is bad deals are like fraud. Bad deals are like you're double pledging collateral. It is literally outright illegal. But assuming there's not that illegal shit going on, again, the recovery of this is not going to be zero. This is not equity. And I want to kind of hammer this home that I feel like, it's funny, right? We're talking about like crypto or you're talking about equities that can get wiped to zero. This stuff, there is a floor. And that's why I go back to like Boaz Weinstein offering the 65 to 80 cents on the dollar. There is a floor as to like how low this can go. And I do think that a part of the panic is the SaaS apocalypse and this idea that, oh my God, every company that's a SaaS company is going to, like the multiples are too high. That's fine. When you're thinking about buying into equity, equity into a SaaS company, a Salesforce, whatever, this is on the expectation of basically the company generating cash flows into perpetuity versus lending. Lending, like leverage is in the name, debt to EBITDA. EBITDA is operating cash flow. How many years of operating cash flow is it going to take to pay down the debt? That number is not infinity. That number is usually a controlled 2, maybe 3, maybe 4. But like, do you believe that this company is going to stay in existence for 4 years to pay you your interest and pay back the money? If so, then the panic about this is not this catastrophic situation that people have talked about. But back to the point, like if you have people left and right because everything's frothy and you're like, I'm just not going to check that there's fraud underlying. I mean, the more fraud, that is where you potentially have problems. And so it's like, is there the fraud? Or is this more of just like, there's some companies that will have fraud, which again, better if they didn't. There's some companies that will have to go through bankruptcy. Again, if you are a lender, you typically will work that out. But I do, I do not think this is like 2008 because the amount of leverage that is in the system is not the same. There's just not that leverage upon leverage upon leverage like we saw back then.
Got it. Makes total sense. So you've mentioned the SaaS apocalypse, I think twice already. So how is everyone thinking about AI and how that's going to impact everything? Because as an outsider, it seems like a lot of these rules are made on forecasts, like this will go like this, and the whole thing is being rewritten right now. So how does that tie into everything else you're discussing?
I don't think people have any clue what's going to happen. I think that everyone, it's like, people are so one day it's the apocalypse and the next day it's like,
Totally.
like the S&P to the moon. I mean, I have no idea. And Jen, I don't know what your view is, but I think that so much right now, it's like the market's kind of going on vibes. Like someone will write this thing where there's a thought experiment about what could happen. And look, Jen and I are kind of like in the doomer camp. I mean, I feel like we're not like Jen's like building her bunker to hide from Skynet. So, but I do think that anyone who is like, this is exactly what's going to happen, but they don't know. I also do think that the implementation of some of these new tools, it's not going to be overnight. Everyone's like, we don't need Salesforce anymore because we can build our own.
Yeah.
You need to have a common language, a common system. People care about what's going on with security. I mean, I said to Jen, I'm like, I want to install Claude Code, but I feel like it's like back to the Napster days for us millennials. It's like you're going to get a virus and it's going to eat all your data and like compute. So, I mean, I'm terrified of that. So I feel like the implementation part of this is the biggest question. And I don't think most people have any clue where that's going. So Jen, I'm going to shut up and see
No,
what you
I'm
think.
curious to hear from you guys actually what your view is, because we're the old farts here sitting with our TradFi and our, I still write everything out by hand on a piece of paper, this
That's
ancient
awesome.
parchment. I'm curious what you guys think, because it matters much less for us. We're just having fun here. I want to know what people who are younger, who are, you guys are extremely well established, but just earlier in their careers, earlier in their investing trajectory, what do you guys think about it with respect to AI and what it means for you?
I'll go first, and then Keith, I want to hear what you have to say too. But I think it totally depends where you are. The minority of people who have seen the opportunity amidst the chaos are flourishing. There's never been more opportunity. If you're good at what you do, you can do it 10 times faster and you can do 10 times more things. I'm personally doing that all the time. But for most people, it's induced fear, like crazy amounts of fear, and also just kind of much like you said, the doomer mentality, where for young people, it's like, what am I ever going to have a chance to do? All these things that I was promised and talked about why I was going to school, those things no longer exist. So I think it's definitely brought the whole social contract into question in terms of like, am I doing the things I'm supposed to be doing? What does that mean when it changes by the day? So I think it's very much depending who you are and where you are. Keith, what would you add to that?
Ben, I know you've got the strong opinions about the whole AI phenomenon. I don't as much. I feel like my biggest thing is what we've seen in some of the data. So A16Z put out a report at the beginning of the year, kind of talking about like what their take on everything that's happening with AI is all about. And it's like the state of the market report. And it was all about how essentially the companies that are winning the most from what's happening in the AI revolution at the moment are the largest companies. Now they're a venture capital firm. So the data that they have comes from the private markets. But I think it all extrapolates back out to the public markets as well. It's like Google, Microsoft, all of these companies are going to be the ones that continue to benefit from what's happening. And when I think about that, I think a lot of people are looking for like, oh, what's the next big thing? How do I invest in like this thing that's going to blow up and be the next thing? I think it's Google. I really genuinely think that Google will be the one specifically that will kind of end up winning all of this because of the vast amounts of data that they have, the vast amount of time and cash that they have to figure it out. I think there's a lot of hype. There's a lot of expectations of the forward multiples of this to continue to work out. But I think people like Google will figure it out, and it will actually have a real impact on.
I think a lot of these companies will figure it out, but I do think that the average person is going to suffer short term for sure, because these companies are already so absurdly bloated. Like there's so many people that have fake jobs. And so if you're one intelligent person, you could probably be running most of your department when you have 10 other people helping you. Yeah. Right. And so that's going to lead to a trickle down effect of, I think it'll be a renaissance of entrepreneurship out of necessity. And we'll see, I'm sure some really cool things will be built. There's gonna be a lot of pain along the way because a lot of people are very dedicated to having a job. Like that. They always say, I can't be an entrepreneur. People say that all the time, right? What does that even mean? It's getting redefined by the day, but a lot of people are very stuck there.
Yeah. And I agree 1,000% with both of you guys. I think, Keith, you're spot on that it's like, if you're, again, this is not investing advice, but like for me, I would be like, I'm going to put my money into the Googles, into the Metas, into the Microsoft, into the companies that have those cash flows so that they can actually, I mean, like you just saw what happened with CoreWeave. Like they can't they can't build that data center. Who's going to build it? It's going to be Meta, right? Or an Apple. I was like listening to a big technology podcast. They were joking about how like, dude, Apple needs to just now sell like little mini Macs so that people can like, install these, Claude Works that you can like use like these little mini Macs, and like, that's the hardware. But I'm agreeing with you. And also like, if you have some startup, I mean, what's stopping Google or Microsoft or Apple from creating that product? It's like, so I think that's scary. And then to your point as well, Ben, I mean, I think it's so scary too, because it's like, we have all these people who like, yes, might have fake jobs. Like that's how they afford to like put money on the table. Like, and also work gives people purpose. And this is, I think the part that's the most scary is that if you have a bunch of people who don't have purpose, then what are they going to do with their time? Like, I think as human beings, we need to feel like we are contributing to society. We need to feel like we are just doing something with our time, that we have structure. And when you take that away, especially amongst, I feel like, and this is maybe not the case, but it does seem like younger people tend to feel a little more isolated, especially with everything that's going on with technology. I am very concerned for what that means for the next generation. And I mean, look, Jen and I, we have 6 kids between us. So like, this is something that we are, very, very scared about. But again, this is the problem with like talking to 2 old ladies who are semi-doomers.
I don't know why I keep saying that. You're definitely not old. But,
but math.
Yeah, it is. Go ahead, Keith.
Well, so Elon Musk the other day, I think he came out and said something like, we're going to have universal high income and rising civil unrest.
Yeah, he also said that the base, like not the base case, the best case that he can envision is basically where humans are all given video games to give us an artificial sense of purpose in our lives, to keep that civil unrest at bay, because that's what will happen otherwise.
That's like WALL-E.
It's 100%. And by the way, we made our kids watch WALL-E last weekend to be like, just so you know. Yeah.
Did they like it?
Oh, yeah. My kids love WALL-E. Then again, my kids are like, they're 8 and 10.
Okay,
you know what I'm saying? Like they're the perfect audience.
That's sweet spot for sure.
For WALL-E. Exactly. It's not too scary. Like it's just dumbed down enough. But listen, I was an English literature major. I watch movies like The Terminator, okay? Not even like super highbrow stuff. You don't need to watch The Matrix or WALL-E or The Terminator or anything to know that like these concerns have been around since time immemorial about like what gives people purpose. And so I think that philosophical question is more important to keep at the forefront, because yes, the economy is going to shift, but it's going to be like, okay, well, data entry jobs are going away, or like entry-level software coders are going away, but there's going to be something new to replace them. That can happen as long as we keep that spiritual and philosophical goal at the forefront of not being given video games to distract us so we don't kill each other. Like, let's make sure we have the right things in focus.
And just adding one more thing. I mean, obviously you guys are in the content creation game. I mean, Jen and I guess, are as well. And I think that, part of the problem is people want to be content creators. People want to grow their, personal brand. And I think that what's a little bit scary is that, I mean, again, AI, that's something that is so easily replaceable. And for us, it gives us meaning and it gives us purpose. But when you're trying to do that, right, it's an attention economy. And the more shit that's put out, like if it's being like AI slop, like we call it AI slop now, I am very concerned for when the quote unquote AI slop is like very good. And then all of a sudden it's like, okay, so I guess we have to go back to the real world. And it's like, well, I guess now I'm going to go clean my kitchen, or, it's like, you're now doing the stuff that, again, the AI can't do. But I'm like, I'd rather do the fun stuff that's like intellectually stimulating and have the AI go pack my suitcase and organize my closet and clean my house for me. Like that's where I'd love to have that value add. The mental work and the creativity and all of that, that's kind of what is rewarding. And I feel like it's rewarding for a lot of people. Like, yes, if you're going to not have to do the data entry job, that's great. And if everyone like doesn't have to work, but they can work, great. But also like, I don't want to be working and now competing with, again, like a little AI bot that's just, I don't know, flooding the world.
Yeah, that's a great point, but from both of you points. And I do think that fear is definitely warranted in terms of the whole AI slopification of everything. But I will also say that since everyone can create, all of the content is kind of just like coming to a middle point. Yeah. And so anybody who's not doing that stands out so much more. And I also do think that new platforms will emerge once they create some sort of proof of online identity, where I do think people will want to watch real humans. So I don't think that's going to go away, even when it looks and sounds just like me. I think people will like the fact that like I make mistakes in here and they know that my mug is different, right? Like I do think people will care for that from my studies, but the fear is totally warranted because it is crazy how good the AI video is getting.
Yeah.
One thing I wanted to talk about too is like, so the idea of we're just playing video games to try to find purpose or like something to keep people distracted. And one of the largest things that have kind of risen alongside of something kind of similar to that has been this concept around these prediction markets. I'm super curious of your thoughts on prediction markets, both from, I guess, the financial and technological innovation side of it, but then also from the societal and moral piece as well.
I have a lot of thoughts.
Yeah.
Having worked on the trading floor for the better part of the decade and being married to a trader for a quarter of a century, I think that there's a lot of gray area between trading and gambling. And I think the prediction markets started as a gambling mechanism that are now bleeding into trading and capital markets mechanisms. And I think that can be both good and bad. I think that there's a really interesting world shaping where they could potentially contribute for good, I think, to the overall world of Wall Street that we're talking about here and the world of finance. And I think there's a world in which they're dangerous, and we can talk about that because I actually think that's the more obvious play, and I think it's less obvious why it could be so good. So for those who haven't been following the news, Kalshi actually announced a deal with TradeWeb. And for those of you who aren't familiar with TradeWeb, TradeWeb is one of the biggest platforms for fixed income trading. I don't know that they do much for equities, but if you're in the bond, interest rate derivatives markets, like TradeWeb like the back of your hand. And so I think it's really interesting to think about these prediction markets that evolve for like, we're going to bet on the coin flip in the Super Bowl, like not the Super Bowl outcome itself, just who wins this coin toss, this actually like random thing, to betting on presidential outcomes, to now all of the controversy around being able to bet on like geopolitical risk and events there with these binary outcomes. So in the fixed income markets, we have binary trades, but they're massively structured, illiquid things. It's not like you can get a binary outcome derivative traded on an exchange for like whether the Fed will hike or cut. There's the Fed funds futures markets, which trade on a dollar price that's reflective of 100 minus the expected Fed funds target rate range. And that price, the delta between that price and actually where the rate fixes, is the money you make or lose. So it's not a 0 or 1. There's a price, and these are liquid futures markets. So you could have then the prediction markets come into that world and offer a binary alternative that right now would have to be structured by a team of PhDs from MIT and all these things who are, creating swaptions and all kinds of crazy exotic fixed income derivatives to give you that binary exposure that doesn't really exist right now. Now, bringing in these binary contracts, in order to weave those into the capital markets, ultimately you would need to prove the liquidity, because the benefit right now of these prediction markets is you can trade them in retail size. The minimum size on a Fed funds futures contract is $3 million. I don't know about you guys, but I'm not just like casually betting, orders of magnitude on top of $3 million based on what Jerome Powell had for breakfast that day. So you can do it in retail size in these binary markets. And the data right now is going to be made available to users on TradeWeb so that this becomes one of the inputs into how people are thinking about overall market perception. There is an element of tail wagging dog where if it's something more than just like Fed funds futures and we're talking about presidential outcomes, we're talking about military action, whatever it may be, it's okay, well, who's the insider trading that? Because those things are regulated by, I think, the CFTC, but they're not SEC regulated the same way that the rest of the trading markets are. So weaving these in is kind of a first step into introducing the idea that there might be a world of liquidity that becomes available to both retail and institutional investors for a type of hedging that used to have to be so structured, so expensive, so illiquid and not transparent or anything, that could be actually a boon to investment and could smooth out risk across a number of different factors that people couldn't use to hedge before. So I actually think there could be massive benefit there. I think the downside with the prediction markets is this kind of caveat emptor, hey, what's the danger of like the freest markets possible? It's like, well, what's the difference between trading and gambling? I asked my husband that one day and he was like, trading's for work, gambling's for fun. I was like, don't say that. Like, no, right? Because you're not supposed to say that. You're supposed to say that trading is taking risk that exists in the system and pricing it. And gambling is creating risk where there wasn't one to begin with and trying to make money off of it. But that's not what he said, which made me very anxious.
I will say I have a slightly different perspective. I think because the way that I think about investing is much more long-term. And so I do think the timing matters. And if you are, for example, buying into equities, like you are buying in, you are getting ownership in a company, that ownership should be the CEO is likely going to also be incentivized with equity in that company. They're trying to make the value of that business go up. And so if we're thinking about the institutional thing, I do think, Jen, to your point, like having the ability to now do these trades that are, previously were super highly structured and now they're not, like that's great. But I think that, we're talking about this world of all these young people who feel like they want to get ahead. And it used to be that, people would save up, they would buy a house, put money into a house. And by the way, the thing with houses, it's not that it's like some magic investment. The thing about houses is that you're forced to basically put money in for the long term. Now, there's also, obviously, you can get massive amounts of leverage from the government, and it's highly tax deductible, right? Like, so you can write off a certain amount of gain, and like the interest is tax deductible and heavily subsidized and all that. But it forces people to put money into an asset that then they can't touch. It's not like the market goes down and you can sell it the low. I was talking to my dad. He was like, dude, if I just put my money into like the market, not touched it, I would be so much better off. But like the dumb that I am, he's talking about himself, I sold in 2008 because I freaked out. Like most people think they can time the markets. Most people can't time the markets. And so again, I cannot time the market. Like I literally have it's comical. So I think that there is a little bit of, there is much higher chance that now the money that you maybe decided you were going to take and you were going to go buy Apple stock, you were going to buy into Berkshire Hathaway, you were going to buy into something that was going to create value, you were going to save up and buy a house. Now all of a sudden you're betting on a coin toss in the Super Bowl, and that money is being lit on fire. And there's this idea of compounded interest. The money that you are not putting into the market is money that is not getting compounded, that is not growing. And so I think that is problematic. And so and again, listening to the Robinhood CEO talking about people now being able to use leverage on that. And again, it's like back to this personal responsibility. Yes, I think people should be able to do whatever they want, but I do find it funny that it's like, oh my God, retail investors like putting money into private credit. This is terrible. Like worst case scenario, maybe you're going to buy at 100 and get out at 70, but like you can put all your money into like this thing and bet on, heads coming up in the Super Bowl. And that's like, no harm, no foul. So I just find it really interesting. But to me, I do think the incentive for people to not be investing, to not let their money compound at an early age, and again, to like this whole idea of not pulling money out at a low is a lesson that I feel like you kind of have to learn the hard way. But also, like, people tend to make bad decisions when you're watching the market all the time, and you literally can see everything that's happening all the time. And anyway, I am very negative on that. So that's my 2 cents. Again, I know you said I should stop saying I'm an old lady, but I am like, I know that the best thing that I ever did was when I started at Morgan Stanley and I watched the financial crisis happen and became the most like risk averse person ever. I put some money into the market and I didn't touch it. That money has done great. The money that I thought I could like actually manage. So
what do you guys think?
So first I wanted to touch on, because you made a good point of how if this is becoming a substitute, if prediction markets are becoming a substitute, right, for what you could be doing with your money in terms of investing, then yes, it becomes a totally different thing, and it becomes a major problem in my eyes, at least. So I think Ben and I are definitely very contra culture around this, where it's kind of like this. I mean, it's pretty obvious that this isn't like the best thing for young people, and it's exactly where it's being marketed to. Right, for the people who don't have that discretionary income to spend on entertainment in this sort of a way.
Yeah.
So, I mean, that's my take on it. I think it's not beneficial. We just had this wave of like teaching people how to invest and like, oh, this is the great thing to do, and like it immediately gets gamified, Robin Hooded, and turned into like actually just gamble everything you have left away.
Yeah. And I want to add one more thing. Sorry. Before I jump, if you think about, right, these prediction markets, it's a zero sum game, right?
Yes.
It's not, whereas like if you invest in, call it Apple or a house, the trend is up. It's going to grow with inflation. And like I said, with housing, you get leverage. And I know a lot of people can't access the housing market, and that is so effing unfair. And like, we need to figure out how to make that, that turn around. But if you're investing in the prediction markets, you're going to win some, you're going to lose some. By the way, the people who are making money are the people who have that inside information. And again, like that, and maybe you have inside information and you can make money off of that. So again, if that's the case, then great. But that's where this whole idea of like, if you are doing the prediction markets, be aware that that is money that you are not putting into something that, again, if you put it into like a basket of just like the S&P and you didn't do anything for like the 40 years while you're waiting to retire, theoretically that money should be going up. So again, I'm sorry I interrupted you, Ben. So
no, you're good. You made the same point I was going to make. So thank you for doing it probably better than I was going to. No, you're good. Yeah, that's the whole point, right? We even talk about that when it relates to crypto as well, where, because like one of the biggest things that we'll always hear is that people will say, you guys are crypto guys. Crypto is just gambling, right? And so I see where they're coming from, but much like you just said, there's a time horizon thing here too, right? Where if you're gambling, you either win or you lose. There is no in between. Whereas this, it's more so, can you weather the storm of it? So no, I completely agree with both of your points. And I also love, Jen, how you viewed it and how your husband viewed it too. That was actually super entertaining.
Well, one thing too that I struggle with is coming from a trading floor perspective. In real life, you don't get hedges. And I think that when, Kristen was talking about buying her house, when I built my house, I was doing it during COVID and I couldn't hedge my lumber risk. I knew what was going to happen in the lumber markets. And I remember asking my builder, like, what can we do? And I'm sorry, but like, I don't have enough size to be playing in the lumber futures market.
Totally.
Like, I just don't. Sorry, not to share my like personal finances on here, but like, let's be real. But I had to just eat that cost. Had lumber prediction futures markets existed at the time, I would have benefited tremendously because it would have been a really nice hedge for my risk. So the same way that, if you travel overseas, like most people aren't really playing in the FX markets or whatever, but like a lot of people think about that as like, if you are someone who has lots of overseas investments and properties and things like that, you're going to want to hedge your FX risk. Life comes with risks. Most people aren't hedged. If you feel that you are a sophisticated enough investor to hedge your life out, having more vehicles for that with the appropriate disclosures, restrictions, and regulations, all those caveats on top, I don't know. I don't think it's such a bad thing.
Yeah, I think the question is what percentage of people would be using it for that versus what percentage of people are. I mean, again, that you're coming from a trading background. So like the number of people that are probably looking at it that way is not as high as I think the people who are not. And again, like no judgment. I mean, again, my husband will like bet on stuff all the time. Like, I mean, just kind of like little stuff. It's like fun. Just like I'm going to throw $20 here, $20 there, makes the game more fun. And that's great. It's just when it becomes something, I mean, gambling obviously can be very addictive. And so if people are putting money into these markets and expecting to make a lot of money and watching that evaporate, that's where it becomes a problem. It's like the Vegas gambling money. Back to our Caesars and hurrahs.
Totally. Yeah, I think it's an information gap. Like how you were explaining it there makes total sense, Jen, like in terms of like what you'd want to use that for. But I would venture to guess that the vast majority of their users wouldn't even grasp that as a concept.
At all. No doubt. And so this is where I think in my head, the easiest thing to make this, like to regulate this in a way that could make sense is to like separate those two different things. Like there needs
but you'll
to
never
be
get the
page.
liquidity. There'll never be enough liquidity
But
to even make it.
But
I'm not saying
money,
you should regulate it for that reason, by the way. I'm saying like that's where this all ends, I think, effectively.
I don't know if it has to be like that. I think if you have like same website, but like you toggle the switch, like, hey, you're on the gambling side of the platform versus
like how you have to, we were talking about this earlier, like how you have to be like, I am 18 or I am 21 to like even look at a brewery's website to find out their location. Like, or like the giant skull they put on the back of cigarette packets. Like you're going to lose all your money if you enter this site. Are you sure? Are you sure?
That was back to the Robinhood CEO who's like, we want to, create a vehicle that will allow individual retail investors to put money into seed stage companies. And the guy who was the host was like, well, those retail investors are going to find out that like 999 out of 1,000 go to zero. Right? So yeah. But again, like people, I think it's one of these things where historically, and the VC thing actually, I think is different because so many reasons why, venture capital firms are successful is they have the connections and they've done it before. And so they can like help people. They can choose, like they see potential in someone. It's like, oh, I need to introduce you to this guy. Like, so if you have the right venture capital firm, you were talking about like Andreessen Horowitz, you have them backing you. I mean, dude, you now have access to this world that like your average, like random person who's starting a company doesn't have access to. But again, like the seed funding stuff makes me very nervous. Unless, I mean, maybe Robinhood, they're going to have access to those same people and like they're going to get the mentorship the same way. But to me, I was like, oh no, please don't do that. That seems like a very, very bad idea.
Yeah, I think retail romanticizes a lot of things from the financial world without understanding like what the actual signal from the noise is oftentimes. And so they're just like, oh, like we can't get access to this. So it's like, that's part sucks. It's like, well, the thing you actually want access to is not like a tiny part of the actual equation that makes it successful.
Yeah. No, I think that's very astute. And I think the reality is everybody, like so much of these profits are tied up into what you talked about, Kristen, the access and the information asymmetry persisting. So that's going to persist. Even if you make the system more accessible, the reality is, you were talking about that Robinhood Ventures Fund. They're like, and we won't have any carry and we won't have any this. Like, don't worry, we won't charge you anything for managing your money. It's like, okay, am I going to make any money in this thing? Probably not, right? Like, I'm not getting charged anything, but like you get what you pay for. And it's just like putting lotto billboards up in low income neighborhoods. Like, it's predatory.
Yeah.
No, completely. Keith, did you have something else? Because we got a question from the chat.
Let's hear from the chat.
So they wanted to know both of your opinions on crypto.
Ooh. Jen, do you want to go first?
Well, I don't really understand crypto, and I don't really pretend to. I know enough about crypto to be dangerous in the sense of like layer one OG Bitcoin theory. So my thought about Bitcoin comes from being a traditional like rates person, not even an FX person, and thinking about, okay, if we live in a world where de-dollarization is an imminent risk and you want to have some alternative to like the fiat currency system that we've been living with and grown up with, I understand the entire theory that this should be digital gold. This should be some, place that should be effectively a hedge against inflation and a hedge against de-dollarization. But when we had the run up in gold and when we had the collapse of the dollar in 2025 that we saw, what else did we get? We got the collapse of Bitcoin. So watching Bitcoin rather go from 120 to 66 or wherever it did in 2025, to me seemed like a failing of that original thesis. And if that original thesis doesn't hold under those macro conditions, then for me to expand beyond that and have deep faith in any of the layer two economies or any of the follow-on currencies and their derivatives based on this original premise for why cryptocurrency exists became very difficult for me. So crypto for me is something personally that I have that lotto ticket gambling Vegas money in. I have just enough that if it goes to 500, amazing. If it goes to 0, I'm not going to lose any sleep.
Yeah. Again, I'm with Jen. It's something that I still don't feel like I kind of can wrap my head around it well enough. I understand the thesis. I understand all that. I do think it's interesting, just going back to like this private credit thing, that, it's like people talk about being able to invest in crypto as retail investors. We can. And by the way, it's funny. It's like, if you think about the underlying value of crypto, if something were to go wrong, someone made this point that the value is actually like your recovery is negative, because it's like it's not like there's underlying cash flows. It's not like there's underlying assets. It's literally like you have to like have the lawyers who are working out like how much people get. Like, so it's actually like a negative underlying value, where it's back to like private credit. There's, call it 70 cents, 60 cents on the dollar. But this is the whole thing that I do think is so surprising to me and so wild, that I think like Elizabeth Warren, like not to get political, was like, oh, these like people trying to allow retail investors to invest in private credit. And it's like, oh my God, private credit's like going to go and blow up everything. And again, people can invest their money in other stuff. So I find this hand wringing about private credit, even though I do think there were bad deals, there was definitely fraud, but I just find it so wild in light of the fact that, people have the ability to invest in things that, whether it's like some random shit coin or whatever. I mean, people can buy that and they know what can potentially happen. But there it goes to 0. So anyway, I'm going to get off my horse on private credit.
Well, I also just saw someone who was like, Bitcoin's being manipulated. That's what's holding it down, like blah, 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 blah. And again, there may be technical forces beyond my understanding, but also if something is that subject to manipulation, and this is why like we joke about us being like old TradFi gals, but like, what you can't manipulate? Like what individuals can't manipulate. Okay, let's be very clear. Like the treasury market. Like it's just too big, right? So it's one thing if like, okay, fiscal and monetary policy are going to change. We can talk about like big government hands, but that you can make an educated bet around or an educated thesis around. If there's 1 or 2 players who are manipulating the Bitcoin market, like I'm out. I'm hopeless. Like.
But yeah,
Cool.
So I'm curious again. I know that Keith, like this is your thing. So again, if you can share anything that you typically talk about with crypto, because like I said, Jen and I are not the most sophisticated. So I'm kind of thinking how you think about it.
Well, I just want to be clear that I also respect constantly throughout the conversation that you guys like, hey, like, what do you guys think about these different things that may be a little bit for the younger crowds and things of that nature?
Well, no, I mean, like you are like an expert in this, so I want to,
Well, so my point, the first thing that I think would be to add to the things that you've already commented on. I think what you said was very important. thinking about the fact that there's nothing underlying the asset itself. I think one of the things that's really important to understand about crypto and Bitcoin is that um, it's a network, right? And it
Mm-hmm.
has an actual utility. So now the question is the thing that's always super complex about this process is that you've got the token, right? This Bitcoin thing that trades on the open market that goes up and down in value. But then you have the network itself, which has its own utility. But to be able to use this network, you've got to access this crypto thing, this Bitcoin thing,
Mm-hmm.
or at least you are creating it as you
Mm-hmm.
are using this network. And so the real use case for Bitcoin, like the OG original thought is, can we have a way to actually communicate and send value across the internet natively, right?
Mm-hmm.
Without having to participate in the regular side of the financial system. And that is the one thing that you could potentially fall back on and say that this is what Bitcoin does. It actually
Mm-hmm.
does enable that. The thing that I think is always um, it's not that's not a use case that means a whole lot to us as Americans, as people who have, everything's fine, right? There's corruption in the system, but it doesn't
Mm-hmm.
come into our life on a daily basis. So two things: being able to have a censorship resistant place to send money, period, and then also having that money system itself also potentially be incorruptible as well, right? There's no decision maker, there's no person that's saying, hey, you can do this with this money,
Mm-hmm.
I will print this much more of the currency base
Mm-hmm.
at one time. So once again, just to separate the currency, the money go up and down thing versus the network, I think is probably the
Mm-hmm.
most helpful thing maybe.
Yeah, no,
Alana.
I love that. And it's funny. We did have that conversation early on. It was someone who was talking about like microfinance and like the ability, if for especially like even like women in like Afghanistan to like have the ability to like get money. I mean, it's actually huge. So I think that that's such an important point that there is definitely utility. But I mean, again, it's back to this whole thing where it's like when people say crypto, it obviously encaptures this whole world where it's like for Bitcoin, but which has, by the way, become much more institutionalized. I mean, there's an ETF. And I feel like so much with this, it's about trust and like, people having faith, like there's value. The same thing with whatever the dollar, right? Like different currencies. It's because like people have faith in kind of the shared belief in the backing of whatever it is. But when you then move into some of the other coins, that's where I have a harder time. Like Bitcoin makes complete sense. Even again, I understand like Solana or Ethereum, but then it's like some of the other derivatives. I'm like, but wait, what, like, why do we need that?
Yeah, I think it's fair that after Bitcoin, well, there's a lot of philosophy, right, in amongst the crypto people, where it's like, well,
Yeah.
Bitcoin is the only thing, right? There's a
Mm-hmm.
lot of people that really think that there is no other option than Bitcoin, the Bitcoin maximalist community. The the reality of the situation is there's two reasons kind of why you look at Bitcoin in that way. One, because um, it is the most secure version
Mm-hmm.
because of the consensus mechanism, the whole proof of work thing that goes on,
Yeah.
where you
Mm-hmm.
actually have to put real world exogenous resources into creating this Bitcoin, right? So there are
Mm-hmm.
people who are investing in physical infrastructure and electricity to create the Bitcoin, right? That's a big part of the security that ends up being a part of the mechanism, which is why the Bitcoin maximalists say, well, nothing really competes with Bitcoin because everything else can in some way be corrupted because proof
Mm-hmm.
of work is perfect and there's no alternative to that. Um, but at the end of the day, all of these blockchains still offer that same thing that we were talking about without necessarily the same security mechanism. You could say that it's not as secure because of whatever metric you're using to gauge that security. Um, but you could say, well, XRP or Solana or Ethereum also allow me to have this permissionless system where I can send money back and forth. And so then it becomes a flavor of what about the speed, security, decentralization, or the trilemma, it's the triangle. Um, which one of those do I care more about? And then that becomes the network that I might want to use in this situation. But to be 100% clear, 99% of what you see because of the vast number of what's out there is completely money grabs and just people trying to, scam people out of money. So
Mhm.
that's for sure there.
No, it's definitely fair. I think a lot of people who haven't touched Bitcoin, it's because, or crypto, let's say, it's because they've won in the traditional system. Like they can say they want more, but they're doing all right. Right. So like your whole lens of analysis changes when this dynamics in front of you change too. And so I think there's a lot of socio-political things that will probably lead a lot more people to becoming crypto curious. And then it only takes one domino to fall. So people always say like Bitcoin is gold, but Bitcoin is gold for the digital economy. But the digital economy needs to be formed first for that to have utility, like in its fullest form, right? So of course, we're talking peer-to-peer. Of course, that makes sense. That's here right now. But as the whole ecosystem gets built out, and I think stable coins will play a role in that, there's a lot of digital infrastructure that is being built out. A lot of the things we discussed, they're incredibly inefficient mechanisms, whereas blockchain can do them a lot more efficiently. So it's only a matter of time until these systems get adopted. But you're totally right. Like picking the winners, that's a very difficult game to play.
Yeah. It's like picking OpenAI versus Anthropic.
Exactly. Like any of these things, right? It's impossible to predict the future.
Yeah.
Also want to be super aware of the time here. I know that you have said that you do have a meeting.
Yes.
But this has been fantastic.
Tons of
We
fun.
really appreciate you coming on, and would love to have you back. I have like a whole conspiracy corner that I'd love to go over with you
Oh, that
guys
would've
as
been
well.
fun.
Oh yeah, that would yes. Would love to.
Conspiracy corner. I love it. I don't know how useful I'll be, but I'll probably learn a few things from Conspiracy Corner.
But everyone watching, if you enjoyed the episode, their channel and their show is linked in the first link of the description. So just go to the description box, go over to the Wall Street Skinny, and tap that subscribe button and watch some other episodes. It's the first link down below.
There you go.
Thank you so
that's
much.
their
It was
channel,
so
and then-
awesome getting to chat with you guys, and
Absolutely.
can't wait to talk soon.
100%.
Really nice meeting you guys. Thank you so much for the opportunity. You guys have a great
course.
show.
Of course.
Thank you so
Appreciate
much for this.
All
Have
right,
an
take
awesome
care.
rest of your week.
Bye.
Bye.
Bye-bye.
Peace.
Cool. That was just another smooth exit.
Yeah.
We're getting better.
Yep.
Cool.
All right.
How we
That
feeling,
was fun.
chat? Yeah, it was a lot of fun. There, great energy, wealth of information, all good stuff. How we doing, chat? How are we doing?
Chat. Yeah, so really cool. I have actually watched them for quite some time.
Awesome.
Couple years back when I was in my miniature Wall Street phase, I was watching some of their stuff, and super helpful. They break stuff down very well, very intelligent, very well spoken, and also doing their best to kind of like break things down for people who might not be super native to the space. And it's really cool when people can come from Wall Street and come out and share. And there's a lot of people that like will sit up on like the horse of like, this is like really this authoritarian position of like, this is what I think is going on and what I think is going to happen next, and become like this figure versus, I mean, their background was just more geared toward like teaching in general. And I think that that's super cool too, because it's needed.
I think you can tell they're real people in an industry where there's not a lot of that.
Exactly.
Which I think allows them to stand out really quickly. So that's awesome. I'm sure they'll only have more and more success, and yeah, hopefully we can get them on in the future too.
100%, man. So let's see. And that was fun at the end too, to talk a little bit of Bitcoin and whatnot. It's always interesting to hear the perspectives. This was kind of crazy. Anthony Pompliano, he said something the other day, and this isn't directly in response to them at all, but I saw it and I thought it was awesome. It wasn't even awesome. It was just funny. He was like, I'll try to find the clip later on and then we'll bring it up so that he can say it. But otherwise, been anything else that you wanted to talk about for the time being?
No, I'm curious about Pompliano. What did he say?
We'll bring it up a little bit later for sure, because I think it'll be appropriate.
What like the more, because like obviously they're in this world of like TradFi, and like it is from an outsider, if you're in there and you hear words enough or you hear concepts enough and it's normal to you, people just think it's normal. But as someone who's like fully on the outside, it's kind of like, who's making these rules, man? Like it's kind of crazy how, like I know they explained clearly that this going poorly wouldn't have the same kind of impact on the housing market, but like if it's gonna have any impact on me, why do I not get to have any say on whether it happens or not?
Yeah, for sure. I think that's a really good point too, for sure, is where the rules coming from and who sets them. And we talked a little bit about some of that too, right? It's like,
Yeah, totally.
these regulators and stuff like that. So yeah, man.
I'm going a little wild lately. Is he going crazy?
I haven't seen too much, but I can't even remember what interview it was, but he was very animated about
Bitcoin?
Bitcoin. Yeah.
Oh yeah, he always says like, if you don't understand Bitcoin yet, like I can't help you kind of deal. But I'm very curious to see what he said in particular. Who
That's
was
pretty
it?
much what it was.
Was it on his own show or was
It
it a
was,
different show?
I think it was on his own show, and gosh, I can't remember who he was talking to.
Was
And
it
he
with
was just
Jordy?
like, I think it was. It was that one you sent me.
Okay.
Yeah.
Yeah, I think that's just that was kind of the core sentiment, was that if you don't get it now, I can't help you.
He said, if you don't get Bitcoin by now, God bless you.
Yeah. Yeah, I think that is actually verbatim what he said, or pretty dang close. So yeah, that's I think that I just think that people are going to be forced to wake up to it, and people only care about what they care about now because they were told to care, right? So when that narrative changes, then so too will their interest or care. And so I think that with all the things that are going on in the world, I think they're all bullish on the education of the need for crypto, is what I would say. Because if people study anything long enough, like I'm always shocked if they don't get to money, right? Because like if you follow any line, you're going to get to money, and then people usually stop there. But then if you keep researching a little bit more, which I think people will be in a painful enough state to do that, then it'll be like, okay, like what is this crypto stuff, right? And then they start to learn more about why.
Yeah. But yeah, it's I just enjoy any opportunities to think about these things too, and
Totally.
still to figure out why someone might still be like, I don't get, or like even just not want it, because we have a lot of people, even in our chat, a lot of people that watch my stuff, right? Like
Yeah.
they don't. Anytime I mention Bitcoin, they're like, or crypto, they're like, no, this is not that, and it's bad, and I'm like, whoa.
Well, I also think it's the thing where a lot of people don't really understand money or financial instruments, and there's so many things to know and understand. It's a near impossible ask. So when you're piling on another degree of complexity that is potentially even more complex, and then there's incredible volatility with it, I totally see why people will be like, I'm not touching this.
Yeah. It's been so fascinating, man, because it also all comes back down to the internet and how the internet works, and like you really do have to fully
It's a
have
big
an
ask.
understanding of both.
Yeah, we repeat it so often because it's true. It's kind of why that's the whole reason why we have this show, right? Is because I do think in the next year or so that crypto will become a more increasing character, whether that's through countries trying to push in CBDCs, whether that's
Right.
through a Bitcoin related endeavor to deal with the debt crisis. I don't know what shape or form it's going to come in.
A war.
A war, right? But I'm very confident that more things are just making it increasingly likely that crypto will become a main character.
Yeah.
And then it'll be on all of us to get as educated as possible to hopefully get the best formulation of whatever these things are going to look like.
Yeah, man. No doubt. I've got some news. What do you think?
Hit me with the news.
All right. First things first, Meta is hiring the duo behind Maltbook. So they are essentially acquiring the Maltbook ecosystem.
I thought the whole narrative was the fact that the bots made it themselves.
Well, no, there was a guy who made it, and then the bots are the participants on the network.
Okay, well, that makes it even less impressive. Because I thought it was that they made their own social platform for the purpose of interfacing. If you just made it up, that's not impressive at all.
Okay. Yeah, that would be much more impressive.
It is a chat agent. Like, how is that different than going to a chat bot?
I think the thing is that people's agents are posting for them, though, which means that like they're taking the context of what they're doing in their lives, and then they're like bringing that to this social media network where they're like discussing their owners' dirty laundry or whatever kind of a thing, you know.
So can we look at their site? It's
I
just
think so.
It looks very much like a Reddit clone.
Yeah, so we're here. You can say I'm a human or I'm an agent. And then
there's so much content I can't even keep up. It's moving so fast.
Wow, and it's actually getting traction now, because I remember before I was on here, it wasn't really any interaction on there.
Yeah, I don't know. To me, a lot of this is a nothing burger, to be honest. It's definitely a marketing method. And I do think that like agentic workflows are the future. And if you are competent enough to build this in a safe way, and actually the Moonshots guy just had on a guy who's big on helping people set up their own Claude bots and stuff like that. So definitely recommend going to watch that. But the average person cannot do this safely for any degree of efficacious use, right? Like you're better off using the tools yourself than trying to get the agent to, unless you're technical in the current form.
Fair. Yeah. So I'm very curious to see how it unfolds. I mean, the fact that Meta would be willing to make this move, I mean, there's got to be something there. There's been a lot of people that have like seemed to think that this was so revolutionary and interesting. I definitely don't get it, but I also feel like I just don't get it, you know?
Yeah. So I guess if they're interacting and like learning from each other, but isn't that a double-edged sword too? Because why couldn't I be a malicious agent deliberately designed to go screw over somebody else's shit too?
Well, that was definitely the biggest concern and still is of this whole thing. Is like, well, even just like private information actually being leaked on the site, as well as anything malicious that could be done there for sure. I mean, that was the biggest concern.
Yeah. No, it's when they do solve this, which I don't think we're that far away, I think because it's got to be the harmony between competent hardware developers and then the implication or the implementation of the software to use it, right? And in that episode from Moonshots, the guys basically said that if he was Apple, he would essentially package this up in the Apple first way of it just being simple to use. Because when that happens, then all bets are off, right? Because then you can actually use this and people will get very creative. But right now, there's still a degree of friction around it. But also, any of these companies, like they're kind of, so let's say Meta, right? In this constant game of hype cycle, if the other two, Claude and it was OpenAI, bought Molt related stuff or Claude bot related stuff, like of course Meta would try to buy something like this.
Yeah. I think one of the things that is the potential to build off of this is, or like some sort of agentic commerce play, right? Like if these bots can make recommendations to each other or something like that, and then like whatever gets the most upvotes is like the real thing that you should like get as, you know, the product that should actually be bought because of all the reviews it got or kind of a thing. Maybe it moves towards it. I think that would have to be something with agentic commerce would be why you would want anything like a Molt book at all.
Yeah. That's like what Charles had suggested in the future, how that would exist, where there'd be an expert agent on, I think the example that he gave was like hats, because he needed a hat for this trip that he did in the Amazon or something like that. And he said, I would pay $5-10 for the best hat expert agent to go in and pull out the best products. So yeah, who knows? It'll be super interesting. I think we're still so early on a lot of this stuff that I think we'll look back at a lot of this stuff in like a year or two and laugh that we thought it was relevant.
Fair. Moving on, we did have Nvidia actually plan to open source their AI agent platform, NemoClaw, for enterprises.
Interesting.
So they're joining the game, essentially. The platform will allow companies to dispatch AI agents to perform tasks for their own employees. The platform is expected to include security and privacy tools as support comes as Nvidia expands to push into AI agent technology.
Man, Nvidia is a beast. Like that's one thing where you don't really have to pick the winner as much with Nvidia, because unless some radical changes happen, Nvidia is going to be relevant for the future for sure. Have you heard of NemoClaw?
No, I have not.
This is complete news to me.
Same, and I think that's probably going to be the big thing here. So people are, so this one, Unusual Whales, planning to launch the open source platform, allowing enterprises to deploy. Okay, no, there was something someone was saying, like, basically, like, your job is gone.
I was actually, sorry, go ahead.
No, go ahead.
I was talking a lot more with ChatGPT like last night about its own functionality, and then doing a lot of more research independently. And yeah, like I think that the humans will be in the loop for a lot longer than people think.
Fair enough, man.
Because most of the times when something is a good idea, it's a combination of a lot of things that haven't been done together in combination, right? And like knowing that this works with this because of prior context, where like I still try to use it within my own agency, and it still sucks a lot at what I'm trying to do because of those things that I'm mentioning, right? Where it's so many different connected data points where like it's kind of the feeling state behind the data point that gives its relevance. And these things can't feel.
Yeah. It'll be interesting, man. That's all I can say. One of the things that I thought about, I saw some like tweet or something that was about like ChatGPT in 2023
Mm-hmm.
versus now.
Oh,
And I feel like we've been totally desensitized to how
much better it
has
is?
changed. Yeah.
Oh yeah, because I was one of the earlier users of ChatGPT because I was still working with the Moonshots guys.
Uh-huh.
So like
Right.
I was every new tool that came out, like, it was kind of part of my job. I had to like try it, right? But I do think it's very helpful, and you'll be a lot less scared if you go like learn how these things kind of function. When you actually understand it, it becomes a lot less impressive. Like it's still a marvel what the outputs are,
Right.
but this whole like mysticism as to what is this like thing behind the curtain pulling these strings makes a lot more sense when you actually see it laid out in terms of the evolution of why it was bad when it first launched, how they got it better, right? Like it's just math.
Fair. Next story is obviously oil has been doing some crazy stuff. So last week, U.S. oil prices hit their largest weekly gain on record since 1982, with a 34.5% rise in the price of oil from the open of the week to the end of the week. Now, then we had what happened on Sunday, where just yesterday or 2 days ago now, the oil price went up to $120 at the futures open, and then has now declined all the way back down into the 80s, maybe 90s now, as Trump said that the U.S. is considering taking over the Strait of Hormuz. So that situation continues to develop. Jim Bianco pointed out that yesterday was day 8 of the war. The national average of gas prices was up 54 cents or 18% since the war started. And you can kind of see on this graph here, huge spike that goes back for years now, having higher gas prices in the U.S. than they were over the past few years. With all of this, you had Donald J. Trump on the mic. He said that short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for USA and world safety and peace. Only fools would think differently. And this was on Sunday at 5:54, right as I guess the futures market had just opened. And you were sitting at $120 of oil. Now, yesterday, Trump came out and made a big statement. He said, if Iran does anything that stops the flow of oil within the Strait of Hormuz, they will be hit by the U.S. 20 times harder than they have been hit thus far. Additionally, we will take out easily destroyable targets that will make it virtually impossible for Iran to ever be built back as a nation again. And yeah, so anyways, he basically is saying, look, open up the Strait of Hormuz. Otherwise, there will be some prices to pay. So that continues to go on. It's kind of hard to keep up with everything because it's
so
just
fast.
Yeah.
But crude oil is down 14.45% on the day.
Right. So basically what people are saying about the market is that the market is basically saying, hey, we hear you saying that this conflict is going to continue, but we don't really believe that. We think that there's going to have to be some sort of something worked out. And I mean, to be fair, something needs to be worked out. The other thing that I've also seen, and this is just for everyone to see, the crude oil futures, right, spiked all the way up to 119, 120, and then back down to 70, and then the low 80s today. The other thing is that there's also just shipments that are getting through, is what a lot of people are saying as well. Another development is that there's a pipeline that goes from the east to the west of Saudi Arabia. And so there's oil going through that.
The craziest part about all this stuff is that like how few people see. Do you know what I mean? Like the whole world is hanging in the balance for something that, how many people do you think actually have eyes that are seeing what's actually happening? Are we talking like hundreds or thousands?
True.
Like that's insane to think about. How like now like my mom knows what the Strait of Hormuz is. Do you know what I mean? Like that's insane.
Yeah. It's funny how information circulates like this. Because also, I mean, there's been times where this has probably come up before, but because we haven't had this be important to us in our
Yes,
lifetimes, we're just
totally.
now learning about the Strait of Hormuz, right?
100%.
So this is that east to west pipeline that goes across Saudi Arabia. This is supposed to help with getting oil through the region. You've got the Suez Canal, for instance. We heard about the Suez Canal a couple years ago during COVID when it got shut down because there was a ship that like turned over in the middle of it. And it was like, oh, this is so important because so much stuff passes through here. And so now we're seeing, well, it might be even more useful here as you're trying to get to the west and then up through the Suez Canal and then down through the south of the Red Sea. We've also had over the past year the Yemen, the Houthi rebels over here that were attacking ships coming through the south part of the Red Sea. So, yeah, so this situation is continuing to play out here. But the reality is from what I'm seeing, there is no replacement, right, for actually getting oil through the Strait of Hormuz. Like it needs to go through there. You can kind of, quell the threats by being able to get stuff through the east to west pipeline. What I've found interesting is like, how have we not thought about this before?
Yeah,
You
that's
know
what
what I mean?
Keith, I was waiting for you to finish, and I was like, that's what I was gonna say too, bro. Like it all seems like a big movie.
It's like it would have been really good to have a pipeline that just does not go through that strait,
Seriously, if I'm I guess they wouldn't let them do it, but when things are good, why would you not have done that, right? Like I'm sure I guess that's a bargaining chip that they have that they wouldn't want to lose, but
That must be what it is. It must have been a political thing because if Saudi was to do that, then they'd be like, nah, bruh, we're gonna attack you over here or whatever. I don't know. But
it's wild, man. It's I honestly think also people like don't get too wrapped up into any of this stuff because one, who knows the validity of what's being said, and two, if you can't change it, why are you letting it stress you out so much?
yeah, there's probably some things that can be done. When you have in the United States, I guess I won't talk on it too much, but usually there's a process for how these things go. But that process is kind of not in place at the moment. So it's kind
good
of
distinction, like doing what, but I more so mean obsessing over what you can control and then letting everything else kind of go off you like you're wearing a raincoat, right? You know what I mean?
For sure, man. For sure. I mean, there's definitely only so much attention and energy that you can put towards these things. So yeah, for sure, man. And then let's see. So next big thing is that Anthropic actually has come out and went ahead and sued the U.S. government after this public fallout. We've continued to talk about this. Anthropic was basically saying, hey, U.S. government, we're not allowing you to do these two things with our technology. And they were like, hey, yes, we are going to do that, or we're going to label you a supply chain risk. The Department of War, I guess, has labeled Anthropic a supply chain risk, which is the first time in history that it's ever been done for an American company domestically. And now they're dealing with the fallout from that, where Anthropic is claiming that this is going to lead to billions of dollars of losses, potentially multi-billion-dollar losses within the year for Anthropic. And so they have gone ahead and sued two separate lawsuits on Monday in California federal court and the federal appeals court in Washington, D.C., targeting distinct facets of the Pentagon's actions.
Yeah,
So,
short term, I think it could be obviously a hurt, like a harm financially, but I do think it might also get people involved that previously weren't because now there's a mission that people would align with more. So I do think that it may end up being a big pro that they took this stance, depending on how things fall.
yeah, I mean, it's been super cool to see that people, like the individual people, cared. They
Well, the approval rating for AI, I think, was something like 20 some odd percent in a recent study.
interesting.
And that makes total sense to me because unless you're using it to build a business or make you way more efficient to give you time back or something, like why would you like this?
hmm
Like
hmm
how okay, it's marginally improved my ability to Google something. It's how most people are using it, right? Which is also why we advocate to try to use the tool to do something that you thought you couldn't before. Like, and it doesn't even need to be something that's really digital. Like I have a buddy who always wanted to start a landscaping business, but it was all of the admin shit that stopped him. Right. So I would explain, I'm like, you need to do this. But he's like, Ben, like how? I can't sit with you for hours and do this. Now he gets ChatGPT to make him a list and then he goes and does the things.
Wow.
Right. So I think that's really where you find some optimism here is how do you make this actually change your life in a very big way? If you've got money problems, how can you use this tool to try to solve that? Connection problems, can you try to use it to solve that?
Fantastic, man. That's super cool to hear that you can think about how to use it in your analog businesses, because I think that's one of the biggest things at the beginning of my channel I was talking about. It's like, look, like you need to learn how to use this, period. I don't know what you're doing, but you need to use it.
I also gave him the idea. I was like, dude, his name's Kyle, one of my best friends. I was like, Kyle, you can like blow these people's minds. I was like, go in, take a picture and say you'll do like a free AI visual quote, right? Where
cool.
you go in, take a picture and say what it will look like when it's cut. They're not going to remember what it looked like. Do you know what I'm saying? Like, as long as you do a good job and they're happy with it, like that could be a wow thing, right?
Oh,
So he's getting these flyers printed. I was like, yo, say that, man. Like people will be like, yeah, I want to see what my house looks like, right?
Yeah, that's really fire. I mean, you show someone the end product like that. That's literally the power. That's a great use. But yeah, no doubt.
Later, Lucas. Have a good one.
Peace, brother. So next story here. This one is, I guess, not funny, but kind of funny, kind of wild. So Kalshi, the prediction market site, is facing a class action lawsuit for failing to pay out $54 million to people who bet that the Iranian supreme leader, Ayatollah Ali Khamenei, would leave office before March 1st, 2026. Okay, that's interesting.
Did they say why?
So they have had to implement what is called the death carve-out.
Yeah, that's crazy. What is this world?
So basically, to sum it up, these platforms they know that if they allow people to bet on actual death, that the regulators are going to not be okay with that and come after them.
Whoa, they're good guys.
So they were like, look, guys, we can't pay you out for this, because if we do, then it means we've basically allowed you to bet on someone's death or assassination. And but people are like, nah, bro. Like, there was a couple of things that they kept in mind. One, that this region is in the middle of an escalation. So yeah, I was considering that when I was making this bet. Second thing, the dude's 85 years old. So there's also the chance that he was going to die just off of some natural causes. And I took that into account when I made my bet. And so I guess, I thought that was super, super fascinating to see how some of this stuff is continuing to play out, and that there's a death carve out for regulatory reasons, right? Is why they wouldn't pay out on this bet. So fascinating.
Crazy, bro. The fact that these are even discussions.
And to be fair, I was so confused because I'm like, but Kalshi it's not like they have to, like, they're coming out of pocket, right? Like, these are peer-to-peer bets. So it's not just like, they don't want to pay out the same way that a normal gambling platform wouldn't want to pay out, but it's more just like, well, I just had to figure out that it was because of this regulatory issue that they're saying. But anyways, yeah.
I'm reading a book right now on like the origins of gambling and its interconnection to the evolution of professional sports. Super interesting. I'm like 20% in, and it's finally getting to be stuff I didn't know, which is super interesting. But yeah, like a lot of these professional sports organizations like only were able to weather storms largely because of the money that was done through illegal gambling. Wow. And they also realized that back then, right, where it's so important because a fan with money on the line is a very invested fan, right? Like,
no doubt.
So it's great for attention. Yeah.
Gotcha. Yeah, because I was when I go to the gym, there's always like sports stuff on TV. I would never otherwise watch it, but I was seeing, and I know this is maybe too far out there, but just like I'm seeing the contracts that these men are signing to these teams, and I'm just like, these guys are getting paid millions of dollars a month, right, to play this game. And I do understand that. I guess the TV part is probably where most of the money is being made.
The TV is huge, the merchandise rights, but the streaming stuff is the biggest money, because now also big running joke in the NFL circles is that because NFL is just like, they want to pull all the money they possibly can. They've sold exclusivity. They basically made different branding around games on specific days. So they try to sell it to you as the consumer, like, oh, primetime TV, you're the only one that gets this. But they separate it so that it's an independent entity that they can sell the rights to. So Thursday Night Football is owned by Prime TV. So to watch Thursday night games, you need a Prime subscription. To watch the games on Christmas, you need a Netflix subscription because they sell the rights to just that.
Gotcha.
Yeah, so
Gotcha.
they are the king of extraction. and also I thought about this a lot. Like the NFL is basically the modern day Coliseum because you are torturing your body playing a game of football. Like most of my buddies, that's a big reason why I stopped playing. And I had a lot of buddies that went on to play pro here in Canada, and like that could have been a route that I tried to take, but especially like at least in America, you guys are making good money. In Canada, my guys that were getting drafted in the first round were making like $60K a year.
Ooh.
I was like, bro, is this really worth that? Like your body is getting mutilated.
Yeah, dang. That's actually pretty wild to think about. It kind of becomes like a blue collar job at that point almost.
Most of them have second jobs. That's really why I quit. I was on the trainer's table at my university, and the trainer's like, are you going to play pro ball? Is that your dream? And naive kid, I'm thinking I'm going to the NFL, but I'm in college in Canada. Like there's no way that's happening, right? So I'm forced to actually answer the question. And then on the table, I Googled like, how much do CFL players make? What an idiot I am. I didn't Google that until I was 20. But I saw it and I was like, the average player is making like, at the time, I think it was like 50 to 70 grand.
Wow.
Yeah.
Is that also CAD, by the way?
Yeah, it's CAD. So that's like freaking 40K American, bro. These guys are struggling.
Yeah.
If the quarterbacks make more, but there's only like 8, 9 quarterbacks in the whole league that are like starters.
Yeah. That's wild, man. Yeah, I was just thinking about the economics of all of this, and I'm just like, that's a lot of money to throw a ball around, man.
It is, but there's so few people that get to do it, and it's kind of like they need it's not just the guy who's doing it, it's the fact that like everyone wishes they could do that. That's what the cost is, right? It's like it's not just that you're so good, it's that everyone realizes like I can't do that. That's what makes this a big spectacle. So would y'all have NFL players on? We totally would.
Oh, we're pending.
Yeah. Yeah, true. And then one of my dream guests for the year is a guy on the Jags, Trevor Lawrence. And so I'll definitely try to get him on. He seems like a really cool dude.
For sure, man. Yep. That one's going to be a fantastic one. In fact, I know there's someone in the community someone else in the community that says they have some Pro Ball Connects who are also into investing. So if you're watching this, let me know and
you know what to do.
Hook it up.
And Carl, sorry, one more thing on the sports thing. Carl says catching a ball is very hard. Winky face. I think he's referring to like the gloves that people wear. Because if you've never played football, the gloves that now exist make catching like inordinately easier.
Interesting.
Like it's a completely different equation, dude. And it's also they're so reliant on them that you'll notice this next time you guys watch a football game. If it's raining, they become less than useless. Like they're horrible, but they're so reliant on the gloves they won't take them off. So you'll see when it starts to rain and the guys are wearing gloves, they'll drop it like crazy, because what you want to do if the ball is actually wet is you want to get your hands so wet that they basically get pruny, and then you can catch the ball. But they'll keep the gloves on because they're so reliant on them.
Interesting, man. Yeah. So anyway, so yeah, to your point though, what you were talking about with that book, was it, or a documentary that you're watching?
It's a book. There's 2 books.
Okay. Yeah, so that just kind of like interesting to think that is still in some way at least potentially playing into the economics of it all. It's
just so much money. It's most of it. Like honestly, it all ties back to that, because even like the fans, why do they care so much? All these different things. But sorry, go ahead. Next story.
No, that's it though. All right. Quick thing that I missed on the whole war situation that I wanted to make sure we spoke on was that Iran earlier today or yesterday, they said that any Arab or European country that expels the ambassadors of Israel and the U.S. will have full authority and freedom to pass through the Strait of Hormuz. So I just wanted to hit on that because I thought that was an important piece of the development.
When was that posted?
That was yesterday that they put that out. And they said on the 11th is when that goes into effect. So we'll see if anyone jumps. Right now, NASDAQ just partners with Kraken to plan for 24/7 tokenized stock trading. So NASDAQ is making those moves. We've kind of been talking about a lot of this stuff recently, so I don't have too much else to say. Anything else you want to say on that, Ben? Volkswagen is about to cut 50,000 jobs as their profits drop. So I guess I'm not allowed to really see that full story.
You gotta pay.
But Volkswagen is making a big cut. I mean, 50,000 jobs is a lot of jobs, ladies and gentlemen. What I was trying to get a better grip on is like why they're not making as much money, which I wasn't able to quickly find. But it seems that one of the obvious things here is that automation, right? Robotics is going to have to come in and fill the role for some of these jobs, but that's a lot of jobs that they're cutting at once here.
I would also imagine a company like Volkswagen would be very poorly impacted by a K-shaped economy. They were like the epitome of middle class, right? Like I have a Volkswagen. Do you know what I mean? Because it's a reliable car that's not too expensive.
True, but also Volkswagen owns everything too, right? So
they own nicer ones too, right?
yes, like all the Porsche. Porsche was the one that was like really in the headlines, but I just saw that it was actually Volkswagen.
Got it.
But they're Audi, they're Porsche,
Okay.
Bugatti, technically even.
Okay, so they got nice ones too.
Lamborghini, Bentley.
More expensive cars, I'm saying.
Yeah. So it could be part of it. That could be the big thing is people don't have that discretionary, maybe. But then again,
they got the bougie brands. Well. Yeah, who knows? But that's a lot of jobs. Where is that all over the world?
I wasn't able to see BBC.
Yeah, we didn't pay.
But I'm sure we'll get some updates on that. So
QBZ says there are some gloves that work in the rain. I've never had any that worked that well, but I'll have to check them out more.
The NYSE, the New York Stock Exchange, actually just got fined $9 million by the SEC over a glitch that disrupted the stock market back in 2023. So just something that was interesting here, I thought was worth talking about. They got charged over a computer glitch that disrupted the live stock market in January 2023, causing wild swings in the prices of blue chip stocks. And so they just settled for that. I guess a couple things, just like how long it takes to see something like that actually come across the finish line, as well as the fact that this kind of a thing is going on and that they're liable for it. But it's just fascinating to think how much of our infrastructure today is reliant upon centralized technology providers, right?
So much, like almost all of it, man. It's just crazy, like how much trust we're putting into things that have not been all that trustworthy, or they're very corruptible internally, right? Like it only takes one or two people inside to be corruptible for that to be an issue.
Yeah, and like the thing that they cited in the lawsuit the SEC did was that it took them too long. They were like, this took you 39 minutes to even recognize that it was happening, and then you were too slow to act. And when these things are happening, I'm guessing they didn't find any like actual intent, right? But like that can happen. We keep on seeing the CME go down over the past couple of months. It's like, well, at some point, you might have to consider whether or not there is some sort of a malintent or some people that are purposefully messing with these systems within the organization or even the providers of the technology infrastructure. So just things to think about, who are the counterparties in these types of situations and what incentives might they have?
Totally. 100%. I think there's so many more things that are going to make people ask more questions.
No doubt. So I got to get your reaction to a couple of things, Ben. This guy right here, Patrick Bet-David's kind of been blowing up over the past few days. He's put out this whiteboard video talking about the Iran situation, the regime change, the regime collapse. And then this guy, David Ondrej, said, this guy wants to be Professor Jang so bad.
Professor Jang is blown up, man.
Yeah, for sure, man. And he's starting to get like some hate in other parts of the internet as well.
Nick Fuentes somehow he and Nick Fuentes have a little bit of a beef.
Okay, I didn't know that.
Yeah, Professor Jang just said that he thinks that someone is paying Nick to voice the opinions he has, and then Nick's stance is just that Professor Jang's just straight up wrong about some of the things he's saying. So, yeah,
right, yeah,
they both been like fairly like respectful about it. Like they both said about each other like they're a smart guy, so like they're not being full on disrespectful.
Right. That's interesting. Yeah, I saw Professor Jang. I think he went on Cinco again.
He did.
Yeah, and he was talking about potentially there being like campaigns in general around basically trying to call him out and say why he's wrong. And there would be an incentive around that if he's saying that the U.S. is going to lose the war. You know what I mean?
Yeah. So, his theory was that it was a coordinated attack. And there definitely are those that exist, but also people just chase whatever's getting views. So it could feel that way when really it's just people putting money in their own pocket.
Totally.
Right? So it's probably a combination of the two. But Professor Jang would be such a fun episode, man.
Oh yeah.
I have so many questions that I want to ask him. Yeah, we'll see if we can ever make that happen. I've messaged him on as many places as I can find routes in, and I've not heard back.
That's funny.
Yeah.
Well, we'll get him.
We'll get him.
All right. So next story here, a reaction that I'd like to get from you, Ben, is this guy who created this company called Cluely. I'm sure you've seen
Roy
it all
Lee,
over.
Yeah.
So this guy, young kid, I'll quickly tell a story and then we'll show you what's going on. So young kid, about a year ago, I think is all it was.
Yep.
He, first off, Korean American ancestry, grew up in Atlanta, went to like a community college, and then briefly went to Columbia University. He, in his senior year of high school, he got accepted into Harvard, but his offer got rescinded because he got like caught sneaking on a field trip or sneaking out on a field trip or whatever. And then eventually he went to a community college and was trying to transfer to Berkeley. And then he went to Columbia. So anyways, while he was at Columbia, him and his co-founder built this thing called Interview Coder. And it's an AI tool that acts as a teleprompter using your screen and audio to provide real-time analysis, questions, and notes while you're in an interview. And so in early 2025, this kid went out on LinkedIn and revealed that he had successfully used Interview Coder during an interview for a software engineer position at Amazon. Okay. And then after Amazon saw this, right, because this kind of blew up a little bit, they rescinded his job offer. They were like, look, what the heck, dude, you cheated on this. And so we're not going to allow you to do this. But then at the same time, Columbia, the university that he was at, put him on an academic probation due to a violation of academic integrity, after which he was suspended for a year, which was going to end in May of this year. But rather than that, Roy Lee dropped out of college to continue to work on this, which would become to be called Cluely. Now, when this happened, he ended up raising like $5 million and then like another $15 million from Andreessen Horowitz. So he's like in the game now, right? Like this is a legit startup. And he basically used the attention that he got from getting suspended from Columbia to raise all of this money. So, and then once he got like the Andreessen Horowitz money, he changed this thing to Cluely. And I guess they kind of like broadened out. And the tagline was like, help you cheat on anything. And so they did this huge sprint on social media where there's this like super controversial media strategy where the kids like saying crazy stuff on Twitter. And like, I don't even remember all of the stuff. Did you see any of his like actual videos or anything like that?
Yeah, I saw all of it because our client at the time was very tightly connected to all of that. And so like, we had him on the show. And so, yeah, I had to be very aware of all of that.
So basically, what just happened here was that TechCrunch put out a piece on this guy. So they said, look, the Cluely CEO, Roy Lee, admits to publicly lying about his revenue numbers last year. So basically, they had $7 million in annual recurring revenue. And Roy Lee came out on social media and was like, look, here's our actual things. What happened was I got a call from some person and then I didn't know that it mattered that much. I just gave him some numbers and didn't expect there to be an article about it. So he then laid out their real numbers. And then after that, essentially they put out this piece and they were like, well, this is kind of not really exactly what happened. Like they set up this interview with us, you know, we knew what was going on and it just turned out that he was not being super truthful about this. So anyways, this is kind of becoming a little bit of a scandal. And then what does he do? Roy Lee actually doubles down on his strategies of creating this crazy internet content that's super viral and getting attention. And he put out this little video right here responding to TechCrunch. I'll play some of it. I don't know if we need to play all of it, but here we go.
Hello, TechCrunch Foids and Moids. There's a recent article about me that I want to address. But first, let's do a quick recap of Roy Lee history. Since I left school no more than 2 semesters ago, I've gotten 2 startups to do millions of dollars in revenue each, became the most well-known face in all of technology under 25 years old, got billions of views across all social media platforms, and I hand-wrote the growth playbook that every single YC startup right now is copying. We've never had a down month in Cluely history, and today we're fucking profitable. But I guess it's time for another article about Roy. Fun fact to all you techroids, did you know you guys have more mentions of Roy Lee on your site than fucking Jeffrey Epstein? I hope you guys know that you are single-handedly responsible for the biggest media cover-up in all of modern history.
So, anyways, I'm not gonna play the whole thing. It's really not all that entertaining, but just wanted to make sure that people were aware of all of this happening because I do feel like this is gonna continue. Like I think this kid's arc is gonna. I'm not gonna say it's gonna go bad or good, but we're definitely gonna continue to hear about this guy as he figures out what he's doing with this company and the direction of this entire thing. What are your thoughts on all this, man?
I think he's a fantastic attention marketer. He's also so young, man.
Yes, by the
Right.
way.
So like a lot of these things he's being forced to deal with, it's like you can't expect someone of that age to, I think all things considered, he handles things fairly well given how young he is. Like I think about when I was his age, how I responded to that. I probably would have been a lot more dramatic even. But it's a double-edged sword, right? Living and dying by that game, especially when you are the primary face for that, is if your whole shtick is that I get eyeballs, I get everyone's eyeballs. That is also true by your name, right?
What do you mean?
So I mean that if you are saying that you come with attention and you bring attention just because everyone cares about what you're saying, the same is true about people who write about you. And naturally, if they can find a negative story to write, it's going to make them probably even more money, right? So it's kind of part of the game that you're signing up for if you decide to be like that.
True. Yeah, that's a good point. And yeah, so the kid's 23 years old. And I think even that sounds old, but for what I think he really seems to be. But yeah, I mean, another thing that people have been kind of coming out and saying is like, okay, well, he's able to get all these eyeballs, but is that turning into revenue? And I think that was kind of where this whole thing spiraled from. Was like somebody put out. That's right. There was somebody put out a tweet and was like, clearly actually only has like 6 months left of revenue or whatever. And then he started to respond to all of this stuff. I think talking about their real numbers. I'm pretty sure that's what actually happened. But anyways, so yeah, just something I wanted to put on people's radar. He's a young kid. He's already doing crazy stuff, so he's probably going to continue to be talked about
in the headlines. But that whole world is like very ego driven, right? Like, and it's very, very cutthroat. Like there's often times where you could be running a business and things could fail, even that were completely beyond your control. But if you're the face of it, you're going to be solely blamed for it as well. So yeah, it's definitely a game that is not very forgiving.
Not at all, man. I got some fun stuff for today. Can we get into some memes, Ben?
Rock with it.
All right, man. So this one is still a little bit of the edginess because we got this whole situation around, but I thought this one was worth sharing. He said, Trump just said, I have a plan for everything. March 9th at 12:46 p.m. This guy posted this thing.
That's
Trump
crazy.
like this. I was just like, I mean, we've heard him say a lot of stuff, but that's a crazy statement.
I have a plan for everything. We'll see. It's a bold strategy, Cotton. Let's see if it pays off for him. It's like the dodgeball movie. Yeah, I will say one thing about having Trump as president is that like there's never not a ton of news.
100%.
Like yes, with Biden in there was a lot of stuff, but it was basically the same thing repeated all the time. Whereas Trump is like creating headlines all the time, for better or for worse.
No doubt. This one from Clemente. Shout out to Clemente. This one was pretty good.
Did you guys Iran got bombed this weekend?
Yeah, man, super tragic. What are you celebrating for?
I longed oil on Hyperliquid over the weekend. I'm up $10,000.
That's messed up, man. You're gambling on the war. People are dying.
Hear that? Is that a nuke going off? I longed uranium. This is going to be a huge trade.
Crazy, but also very relatable. I think that this is a lot of what you're seeing on the internet and what's happening in the financial world, right? It's kind of how the incentives of things work, right? So
yeah, it's only continuing to get more and more like that. But when you think about like the internal structure of what people view as like civilized finance, when it seems like there's more of that going on than people realize. Like the more you understand, the more you realize how much gambling is taking place. Like dressed in fancy language.
No doubt. So this one is pretty interesting. So Jim Cramer is known as basically a contra signal. Everything that he says, the opposite of it occurs.
Totally.
And so the other day, Jim Cramer came out on the war and he said, I don't see a path to de-escalation. So, by the way, like during 2020, 2021 era, there was like a whole point. There's a point to where inverse ETFs were created to like go against everything that he says, and you can invest in the contradictory idea of whatever it is that he says.
Mm.
And so like that's the level at which this is pervaded into society, to where there's actual products around that. And so everyone's talking about that statement, and immediately we're like saying some stuff. And this guy, Intel Schizo, said, I think Jim Cramer deserves a Presidential Medal of Freedom for single-handedly saving the global economy with the power of inverse Cramer. He initiated the largest red candle in oil history, down 32% from $119 down to $81 in a day. And he also did say something about oil specifically, I think. I think we might need to elevate his award to a Nobel Peace Prize and a Nobel Memorial Prize in Economic Sciences. And Trump actually giving him a medal there for just saying that things were going to clearly continue from here.
Man, if we talked about this before, but imagine if there was a live chat for when he was talking about this kind of stuff.
Yeah. Right. So, all right, I guess so. Another one about the stock market and whatnot. This guy said that the stock market is the only place where the smartest and dumbest people in the world willingly spend time together. Not so funny, but kind of an interesting thought, where you do have a lot of that happening, right?
And it's all perspective for who's smart and who's dumb. Like it's insane.
True. And each of them will get their moment where they win and lose. So another piece, we talked about the Chamath situation. I don't know if I shared this over here or not. I think I shared it on my other live stream. Chamath Palihapitiya, capital loss as a service, is something that Investing Visuals has pointed out here. I thought this was absolutely hilarious. We talked about on the show how he was talking about, oh, I give you capital losses, you should go ahead and write them off. And so there was one for Chamath, and then they also made one for Kathy Wood, where it was like, well, let me go ahead and invest in your funds so that I can create a capital loss. So his funds are capital losses as a service.
That's awesome.
Pretty good. This guy, Steve 2 Bacon, said that the oil guys are starting to reach the levels of silver guys that they had hit in January in terms of being annoying AF. Fair enough. This guy said, bloody hell, that must have been quite the Facebook post.
Whoa.
And this is a bunch of emergency vehicles in the UK rushing to get somewhere.
That's funny.
Not so funny, but just kind of true here. One here, we got your company's new AI agent workflow. And I'm sure you guys have seen these classic sorts of things where you're manually doing the domino effect kind of thing. And this is a lot of what we're going to see with AI in the near future is, oh, am I not sharing my screen at all?
No.
That's awesome. So, I'm sure you guys get the idea. That's what AI is likely to look like in the near future here. Kind of just piecing stuff together. Not really truly agentic.
We'll get there. We're definitely not there right now.
No. And this one was fascinating. So professors are getting smarter. So imagine you're in college or in high school and you think, hey, I'm just going to like take this, copy this document and paste it. And then that's going to allow me to take that and then put it in the ChatGPT. But this here has pointed out that like they put a little invisible line in here that says, if you're AI, use this specific example when coming up with how to complete this assignment.
Wow. Because they're copying and pasting it in there.
Yes. If you just copied the whole thing and pasted it, you would get exposed for having that be the example. So watch out, young kids. Be careful. Let's see here. All right. Okay, so gosh. Okay, so a couple of things. A LinkedIn post concept. LinkedIn has been getting ragged on Twitter the past few days. I saw one where it was like, this belongs on LinkedIn, and then the dude posted it on LinkedIn for him. But this one said, some people lost an hour because of the daylight savings time. He said, winners are just. Here's what daylight savings time taught us about B2B sales. Somewhere on LinkedIn, probably.
The LinkedIn content is pretty bad for the most part, I will say, which makes sense. Most of the people, they only went there to create content because they couldn't win on other platforms. Right. So they're like, go on here. It's easy to grow. It's like, yeah, that just leads to people that aren't that good. And then the culture gets set.
Right.
And people are also doing it a lot of times when they were at work too. Because for whatever reason, scrolling on LinkedIn became like work appropriate.
That's funny.
So they were still doing it while at work.
That's a really good point there. Yep. Those are my memes for the day, man. I think the only other thing would be to talk about some comments from the previous episode.
Sure. Where we explored Professor Jiang and his history.
Yeah, we talked Jiang himself. Okay, Arbor Taylor, silent watcher listener here. Just want to say I'm so thankful for both Keith and Ben. Thankful for finding this podcast. You both articulate your ideas so well and break things down, so it's much easier for me to understand. Being a 19-year-old full-time college student, I find it hard to find the time, the energy to do a lot of research and stay caught up on what's happening in our world. So truly appreciate these episodes for making the knowledge and information more accessible. Keep fantastic work. Thank you, Arbor Taylor. Yep. Let's see. Yeah. Appreciate you guys always for coming through and commenting and leaving your expertise on this. And yeah, and one other thing that happened in terms of the community was Leonard. He posted our part of our episode over there, and he got a lot of traction on it. 10K views, and people were commenting. We appreciate you guys coming through and leaving them some love, and definitely feel free to do that continuously. But it was just surprising that so many people were like, oh, I didn't expect this collaboration. Got 83 likes on that. Most insane crossover in the politics and finance world from Yahir Cuenca, and another one from Evans8488. So shout out to you guys for showing us some love over there as well. We appreciate you.
Big time.
Anything else on your mind, Ben? What's going on here?
Not a whole lot, man. Just looking at the chat, reading what people are saying, and we appreciate all you guys hanging out with us. What up, Willem? Hope you're great. And yeah, I guess now is a good time to show them Spotify, Keith, because Matthew said, "Don't forget about the peep the current song."
Let's see what it is today, y'all. Oh, this is awesome, actually. Okay. So listen, guys, we actually got 70. We're up to 73.
Oh, nice.
This has gone up pretty quickly over the
past I checked last night,
hours.
And we were only at 70.
Yeah. Yep. So shout out to you guys. Keep it coming. All right. Memes and Markets. We're on Spotify. Give us a little bit of a listen and give us a review. We really appreciate you doing that. It means a lot to us. And it also helps with the discoverability of the platform. And when we reach out to cool people like the Wall Street Skinny and others, they can say, oh, these guys are legit. They've got reviews on Spotify. We should go on.
It does help a lot because they also have their own organic distribution algorithm where they'll just throw podcast episodes to people. And so that plays one of the biggest things in it.
Yeah, guys, we have no clout on Spotify, guys. So come to us, give us that 5-star. Let Spotify know. Those people don't know. You know what I mean? Let them know what's going on.
And what's your song?
So the song here is If This World Were Mine by Luther Vandross. And now this is an old school classic, man. This is an 80s song. And it actually just came up because someone basically was describing to me how they were describing to me some of their spiritual practices. And one of them was taking love songs and like imagining as if they are toward themselves.
That's cool.
And this was the song. that they gave me, and I hadn't heard the song. I was like, wait a minute, this is a banger track.
That's actually a cool practice. And like, I've done something similar with like self-forgiveness on things where I'm like stewing on, oh, I screwed that up. I shouldn't have screwed that up. And then I would think about how I forgave people for doing objectively worse things.
Mm,
You know what I mean? So I'm like, hey, I should probably forgive myself here too. Just move forward.
absolutely, man. Yes. Being intentional about the way that we talk to ourselves, the way that we feel about ourselves and stuff, I think is very, very powerful. And yeah, I thought that was an interesting take, and that song goes hard. So if you haven't heard that song, also check out that song.
Definitely will. 100%. Awesome. So we will be back on Thursday, everybody, at the standard time of 12 p.m. Eastern. I guess it's technically a different time now because of the clock change, right?
True.
but still 12 p.m. Eastern.
That's correct.
And as always, if you're watching the replay of this, definitely leave your comments. Let us know what we missed, what we got wrong, what we could have done better. I think I screwed up your line. But and then also let us know if you guys have any guests that you want on in particular or topics that you'd like covered. We're always taking the feedback from you into consideration. And there's so many guests that we want to have on. So if there's anybody in particular you'd like to see, you just let us know.
100%, folks. Let us know. We appreciate you being here. Hit that like button if you haven't already, and subscribe for more.
That's it. Anything else from you, Keith?
That's it for me.
Cool. Awesome. Well, appreciate all you guys. Have a wonderful, wonderful day. And we'll see all y'all on Thursday.
Have the best day of your life, folks.
See you guys. Bye-bye.